Single-digit sales growth. They're keeping the other areas of the business the same, but lowering the guidance there. And Swedbank in focus, a better story there, better than expected profits from that banking business guy.
Let's talk about the index levels. Let's talk about what is happening here in Europe. It's been a really good run recently, hasn't it? Let's see if that continues into the open here this morning. We're expecting a fairly flat picture. Cree's just been laying out what the futures picture looks like, and I think we're already going to see evidence of that coming through with the FTSE 100. No clear sense of direction emanating early out of the European story. But does that change a little bit later? So many potential moments in today's session that are going to be interesting. Is it the claims data? Are we going to see some sort of an effect coming through from California? What does that labor data tell us about the trajectory for the economy? I know it's week to week, but it's high frequency. What is that going to tell us? Or is the main event what comes out of this event with Donald Trump speaking to the delegates of the World Economic Forum a little bit later on? So much maybe to throw into this market. But early doors, I would argue, maybe not a clear sense of direction coming out of Europe, as you were, seems to be the narrative.
I think that's a fair one, and one that's kind of a tale of two tech stories, at least from the initial reaction that you're seeing in the opening trade here. The Stock 600 under seeing some weakness, but it really is those heavyweights, that core six, the sensational six. Not so sensational today, where some of your biggest weights are coming from that bunch, but some of your biggest outperformers also coming from some fan favorites. Schneider Electric, for example, moving to the upside. But I mean, I think it's the right characterization, Anna. Like I said, it's kind of a mixed picture today.
Right, it is a bit mixed. Nice moment then to reflect on. Yes, interesting that Schneider Electric is doing okay, because I was looking at some of the names connected with data centers and AI that have been doing well recently. According to Bloomberg Intelligence, they had a nice chart, and you have to go quite far down to find those European names. They are in there, but they're far down the list, and lots of US names above them. In terms of things that are moving around this morning, interesting to look at where, I don't think we've got an opening price on Puma just yet, but interesting to see how weak that goes because of what they've told us overnight, but because of course, the yesterday story around Adidas was so strong, and that pushed Adidas up, but it also pushed Puma up, and so you would expect to see something of a pullback when that one opens.
EQT out with numbers this morning, private equity, actually talking about an increase in exits, which I think is interesting as well. That stock's up really strongly at the top end of the market, so we're seeing some evidence of maybe a little bit of positive news from private equity coming through, so that's fascinating. ASML is quite weak, which I think is interesting too. Where does that stem from? Given that actually the chip story has been relatively positively recently, and it's interesting that the miners are kind of hot on its heels, but it's actually European tech is under a little bit of pressure this morning. ASML is down. SAP is also soft, which I think is interesting too.
We've got a downgrade to ASML, but you know, there are plenty of other analysts out there with a different view, so I'm not sure how much that is driving today's move, but there is one downgrade to them today out there, so that could be something to factor in.
But this whole tech outperformer this morning, Schneider Electric having a good day despite some of its tech peers, as you point out, on the back foot, ASM as well. But it's interesting that alongside tech, and you have energy dropping as well. We should also mention we're keeping an eye on Puma as well. Puma shares are taking a little bit of a hit as well, so we're going to dive into that story shortly. Let's take a big picture look, though, at this market and whether or not Europe is maybe having a moment. Let's bring in an expert. Markets Live executive editor Mark Cudmore joins the program. Mark, we've been talking all morning in the last hour or so about what the bull case for Europe actually is. Is it cheap enough to own at the moment? Your view?
I think the long-term bull case is still not very exciting, but I think you've hit kind of nail on the head there, Critty, that it's the negatives are largely in there. It's very, very discounted. And remember that we're trading this week a very positive macro tailwind. The big bad wolf of very aggressive tariffs has not been delivered. It's not been delivered anytime soon. Sure, it may come in the future, and that means that risk assets can rally. They can focus on the fact that earnings are generally good. So I remain positive stocks generally, globally, and I think the discounted ones, the ones that were pricing in perhaps a new world that was all about like US companies, I think probably incorrectly so, are going to gain the most. That's why I think that many around Asia, Europe, they're the ones that can gain. It's really important to emphasize though that while I'm painting this very, very positive picture, I don't think this is a long-term one. I think it is a window that lasts for a couple of weeks. Yeah. We're still going to have a volatile new US administration, and we still have expensive valuations in the US. So this is not about aggressive bullishness, but it's that we've got a window to be positive that lasts to at least the end of next week. Let's see how much longer.
If you look at the options market, there's not a great deal of call buying at the moment. This doesn't feel like a market that's being chased. Does that kind of, how self-limiting is this rally if the market is waiting for more bad news? How far can it really take us, and how convinced do you think traders really are about it?
So I think this ironically makes it more sustainable but less powerful. You're absolutely right that people are kind of going, yeah, we've got no tariffs now, but they still could come at any point, and things can change quite rapidly. And we already have expensive valuations for a lot of US stocks in particular. So people are not going to get enthusiastic just because we're given a relief window. But it's actually because that people are nervous out there. We don't have excessive positioning. We don't have excessive bullishness out there. We saw that from the sentiment, the AAII sentiment survey only a week or so ago, that the bullishness had suddenly dropped despite stocks being near the high. It's because of that nervousness that I think that we keep on kind of grinding, to slightly higher highs, despite the fact that we don't get any bullions out there, any effusive bullishness.
Let me ask you about Chinese stocks, Mark. We've heard some initiatives from various regulators over in China trying to get more pension money, insurance money into Chinese stocks. The bounce as a result of that was pretty short-lived. We are still positive on Chinese equities, but only just. But it did deliver a sugar rush to markets. Do we view this in the context of, now we're in the Trump presidency, now China can start to unleash some of the measures it's been keeping up its sleeve? What do you make of that news flow?
I mean, first of all, you're right, Anna, to make the point. I'm going to repeat it. It was pretty underwhelming reaction out there. I mean, this is a market where there's a large retail participation. It would be hoped that this kind of institutional boost would make a difference. But it is, over a long period of time. It's not going to necessarily be an immediate impact. I think this is just yet another measure, which we've seen many over the last 4 months now, of trying to a marginal measure to stabilize the market. And I think it's the same story. Look, this is a market that's up about 25-30% over the last 4 months, and that's the idea that it's not going to keep on going on up at that pace. And in fact, this is an economy that has structural problems. They are now acting very aggressively to counter those structural problems, but this doesn't get us back to the old school China bull market that people really, really want. It gets us back to a market that's probably going to return better than average returns. It's probably going to be an overall good investment, but it's not going to be an exciting one, and there'll be something else out there that beats it. But if Chinese, Hong Kong stocks, if they can return 50% this year, that's a good return.
Well, Mark, when it comes back to European stocks, what is the bigger read-through? The headline risk you get out of the United States, or perhaps some of that fiscal stimulus read-through from China?
I think it's still going to come down to America. I think that's the more important one at the moment. As I said, I am very much in the camp that we're probably not now getting tariffs maybe to April. It's still likely tariffs are going to come through at some point. We've got the new arm of the U.S. government that Trump's setting up to collect those tariffs. We know he's in favor of tariffs. We know they'll likely come. He might even impose them just temporarily for negotiation points. But we know tariffs are likely to come at some point. On who and at what level, we don't know. And what sectors, we don't know. And I think that is ultimately still going to remain the big story for 2025, even if it's not the story this week that we thought it would be. So I think that's still going to be the biggest driver for Europe. Europe. The other issues for Europe is that, as I said, in the stocks market, much of the negativity around European growth is priced. It's a valid negativity. It's not like Europe is suddenly a bull story. European growth is problematic. European debt problem is problematic. European politics is very problematic. The German election, people aren't really focusing on that enough. What was happening in France around its fiscal situation, I know it's not an election anytime soon, is also problematic. So I think we've got many problems in Europe, but much of them are in the price. And therefore, this is just a short-term relief rally. And ultimately, it'll be more about what happens out of the US this year rather than the China fiscal story, which is going to support, it's going to help Europe, but it's more about stabilization. It's more marginal. It's not a new super bull market.
Mark, great stuff. Thank you very much indeed. Marcus Love, Executive Editor, Mark Cudmore. Let's talk about how European equities are performing this morning. Let's show you some numbers and give you the core six to give you an idea of what the centre of gravity looks like. A little bit of outperformance coming through from Schneider. I wonder if that's on the back of the interview that Jemana did a little bit earlier on with the CEO of that business. But elsewhere, actually, tech is showing a little bit of weakness. SAP's down, ASML is under ASML's down a lot this morning. 3% move to the downside on ASML is a significant move for a heavyweight stock. Elsewhere, you've got weakness in LVMH and Ferrari, Novo's flat. But the standout story, actually, to my mind, is weakness in materials, but also significant weakness in tech. Let's get some details on other stocks that we're watching. Joe Easton standing by.
We're seeing some big weakness in Puma today, guys. It's been a bit of a volatile day for these sportswear stocks. Remember, yesterday we had that massive beat for Adidas. That stock was up 6%, but Puma today going the other way on their weak net income. Now, analysts I've seen over at Citi pointing to double-digit % downgrades for the company in terms of their sales for the year ahead. So that does look to be the biggest weak spot in the market today and potentially going to weigh on some peers later as well. AB Foods, meanwhile, Primark giving us a rare downgrade to some of their sales guidance. They have seen a big miss on their like-for-like sales in the last period, the key Christmas period. We do think of Primark being absolutely indestructible, don't we? But that stock really is surprisingly weaker. It was weaker by around 2%. It's actually coming up a bit at the moment. It has sold off given the weakness we've seen in UK retail over the past month or so. Then in terms of EQT, a couple of big financial movers. As Guy was mentioning, a lot of exits at the private equity company. 70% increase in exits in the latest period, according to the firm. So that is the best performer on the stock 600 at the moment over in Sweden. And then another stock also on the Swedish market. This was Swedbank in the banking space, the first of the Swedish banks to report, and it does look like strength in net interest income coming through once again, and the mortgage market looking pretty stable as well. We're going to get results out of Handelsbanken over the next couple of weeks and a few other firms, SEB as well. But this potentially looks like a good reader for that sector heading into those key updates from the Nordic banks. Then in terms of ratings, did see a couple in the commodity space catching my eye today. We had Total Energies, a buy over at Redburn. That looks to be a valuation call given some weakness versus their price targets. That one comes up to buy. Not too much of a reaction in that one. But the other one was Norsk Hydro back in the Nordics. I like this one because Kepler talking about a massive looming supply deficit in the aluminium market, which I thought was quite interesting. They're citing China and they reckon you should be buying into there. Again, we are seeing a bit of a broader weakness in commodities given some softness in some base metals today. But Norsk Hydro, a buy over at Kepler, that one stood out to me. Keep an eye on that one over in Oslo later today.
Joe, thank you. Joe Easton from our equities team with a briefing on some of the stocks that are moving this morning. Thinking of sectors that are moving, technology is an area of weakness. We'll talk tech shortly. Coming up, Elon Musk and OpenAI's Sam Altman spar over the US president's announcement on hundreds of billions of dollars in AI investment. More on that next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Minutes into the equity market session here in Europe. There's a few little things that are on the move at the moment, which I think is quite interesting. This is the kind of the broader picture we are seeing across Europe. At a headline index level, you're not actually getting very much. At a single stock level, there's actually some quite big moves that we're watching out for this morning. But the Stoxx 600 is unch at the moment. That kind of tells you everything you need to know about the kind of the bigger picture story. But let's talk about some of the individual stock names that we want to be focusing on. Shares in Puma are one of the real standouts this morning. The stock is really under pressure. The sportswear company, do we call it a sportswear company? I guess we can call it a sportswear company, announcing a new cost efficiency program, disappointing earnings. Where did this come from? Nobody saw this one coming, certainly judging by the stock reaction. Tim Lowe joins us now from Munich. Tim, that's the question. Where did this come from?
Yeah, exactly. If you go back a couple months in November, as Puma was putting out its Q3 results, a lot of the signaling was that things weren't going so bad. The guidance was going to be hit for the full year. Things were still looking good in the midterm. And then this came out last night. The news was also a little bit vague in the releases, I think, and it's taken a couple turns for analysts and traders to sort of digest the news. The thing that sticks out for me is a profit warning. They're pushing back their profitability targets by about 2 years, and that comes after some disappointing fourth quarter results. The whole thing raises the question of Puma, where's the brand heat? What's going on here? And their crosstown rival Adidas just yesterday put out stellar results.
Yes, Tim, tell us more about that contrast, because disappointing enough to put this news into the market, but even more disappointing for investors when they sent the shares up 3% yesterday in sympathy with strong numbers out of Adidas, and then today looks starkly different.
Absolutely. And I mean, for Puma, they're in a tough spot. The Adidas CEO, Bjorn Gulden, had been the Puma CEO for about a decade, and it was a very successful era. So the new CEO, Arne Freund, he's a young guy. He's been trying to sort of come out of the shadows. And as soon as Bjorn goes to Adidas, Adidas starts taking off. They've really benefited from the retro footwear, the Samba, the Gazelle. They were first out of the gate with that at Adidas. Puma they have also in their archive similar shoes that should be able to compete with that. The Palermo, but they were slower to get it out there. And last year, Puma tried to come out with a brand marketing campaign, first in a while, just merely raise the excitement about the brand itself. And it just hasn't seemed to connect with consumers. And so, you know, a day after Adidas had stellar results, this is, I think, just throwing into sharper relief the challenges that Puma is facing.
Well, Tim, walk us through these specific numbers then. I mean, we know we've been talking about this cost-cutting program in response to that margin pressure, but just how pressured are those margins?
Yeah, so the company reiterated its midterm targets. It wants to get, you know, its EBIT margin to 10% in the long term. You know, right now it was 7.1% last year. That's below Wall Street estimates. The number of people are really focusing on is 8.5%. Puma had said as recently as November that could arrive in 2025. Now they're saying 2027, assuming that these new cost-cutting measures bear fruit in conjunction with this brand campaign that I just referenced. So, you know, some analysts have said there's going to be some significant consensus cuts today, looking at 2025 and beyond. So the shares are reacting to that right now, and one wonders when a sort of trigger may arrive that can resurrect that.
All right, Bloomberg's Tim Lowe walking us through the Puma story. Of course, those shares down pretty aggressively. We'll see just how far that drops.
Yeah, talking of stocks that are under pressure, ASML also under pressure over in the Netherlands, and the Dutch Prime Minister says he expects President Trump to keep pushing to restrict exports of ASML's chip-making machines to China. Dick Schoof spoke exclusively to Bloomberg's Chad Thomas at the World Economic Forum in Davos.
It's very important that the security of Europe is on top of our minds and also on top of the mind of the new American president, and therefore it relates very strongly, of course, to Ukraine, and make sure that peace in Ukraine is with Ukraine and with Europe. And economically, it's very important that the open relationship and the open trade relationship we have is still in place. So we are looking very carefully at import tariffs and what that could mean for our trade and our companies.
Do you expect Europe to remain united if there becomes a tariff war? Obviously, that's not what anyone wants, but is there a worry that it's sort of every man or woman for himself and countries within Europe don't stick together?
Well, there is always that worry. But in the European Council, I think we have the idea that we should do it together, that's important. Whether it's on the positive side in making sure that Europe is competitive, but also, you might say, on the negative side, if we have to react to what the Americans can do, and that's going to hurt our economy.
Are there discussions already taking place within the European Council of how you would potentially react if you had to?
Well, of course, we had some discussions about how could we react, and one of the most important things is that we should react from a strong position. I mean, Europe has a strong economy, has a strong competitiveness already, has a strong consumer base, so that's important for United States as well. So that gives us a strong position. So you can really rely on a good discussion with the new administration and see how you can work out all kinds of deals.
You have a strategically important company based in the Netherlands, ASML. What do you expect from the Trump administration when it comes to ASML?
Well, I think that in relation to the China policy of the United States, and also when we look at the Netherlands, we are aligned, more or less. But when it comes to ASML, we have on a weekly basis, we have discussions, and we want to make sure that ASML, which is a very important tech company, and it's very important for the Dutch economy and also very important for the development of high tech in Europe and in the Netherlands, we want to make sure that that position is in place, and therefore we also made all kinds of arrangements with ASML and with the local government and the technical university to make sure that ASML can thrive, but also the whole community around Eindhoven, it's called Brainport, can thrive.
Dutch PM speaking to Chad Thomas. Let's stick with the tech theme. Elon Musk is questioning whether the companies behind President Trump's $100 billion AI investment venture can follow through on their promises. The CEO of ARM, one of the companies providing technology for Stargate, he's indicated that the project has, quote, solid financial backing. Rene Haas spoke to Bloomberg's Caroline Hyde.
ARM will be the CPU of choice, if you will, inside these AI data centers. We power Grace Blackwell, which is the NVIDIA product that will be used, but lots of opportunity for all kinds of ARM technology. But most importantly, the CPUs that power Stargate, they'll be ARM.
So already, as you say, integrated into Grace Blackwell, what sort of innovations could this stir on your side? What way will we see your designs progress into this supercomputer and more to come, maybe?
$500 billion of investment and multiple gigawatts of energy require incredibly efficient processor solutions. So I think as we go forward, as these plans get more and more defined, I think there'll be more and more opportunity. But right now, we're super excited to be involved with NVIDIA and Grace Blackwell.
I think that's so key. As these plans get more and more defined, these are at the moment pretty new announcements coming, but people questioning how new the ultimate decision to spend has been, because we already had Massa, of course, this leader of SoftBank, which in many ways owns a large part of ARM, talking about this $100 billion investment in infrastructure in the US, but a few weeks ago. How long has this been in the making?
These discussions have been going on for many months. Something like this does not happen overnight. I think the world has seen that to reach AGI or ASI or some of the capabilities of artificial intelligence, a tremendous amount of capital is going to be required. Obviously, a lot of power is going to be required. A lot of compute is going to be required. Masa has been looking at this for quite some time. We've been talking to the OpenAI folks and Oracle and MGX and Microsoft and NVIDIA. So I think what you're seeing that just came together was the culmination of all those conversations, but it didn't happen overnight for sure.
Does it have the money? I'm afraid some shade being thrown on this project by one Elon Musk. Do you have anything to provide? I know you're the technology partner, but what about the capital?
Yeah, I haven't seen Elon's tweet, although I certainly have heard about it. There is a lot of backing for this, Caroline. Believe me, it was not taken lightly to make the announcement yesterday at the White House with President Trump. So I think you can feel pretty good that the financial backing behind this is quite solid.
That was the ARM CEO, Rene Haas, speaking to Bloomberg, saying the financial backing behind this Stargate project is quite solid. And just backtracking then what Caroline was saying, yeah, Musk questioning if the company's if the project has the money that it says it does. Not the only voice, actually. I saw the Anthropic CEO also questioning whether there is the money that is needed for this. And Sam Altman kicking back and saying, yes, we have the money, and Elon Musk, you should be more pro-America. That's his message.
I mean, that's quite the rivalry now showing up on the stage. I think it's fascinating, though, but isn't the part of the issue of trying to quantify and trying to price in just how far this rally actually takes? Because nobody actually knows, one, how long this rollout is, how much investments it's going to take. We just know that it's a lot. We don't actually know what those numbers are.
They're going to be big, though, aren't they? But we already know. But we already know they're going to be big, and that's the point. Like, how much of this is already factored in? How much of this is new money? How much of this is already existing projects that are kind of in train and already being talked about? I think that's a key question as well. I haven't talked a lot about NVIDIA around all of this. Presumably, it's going to be a pretty big beneficiary of this. Kind of what are the companies that are also going to benefit from this process too? Is this enough to keep the AI train on the track? I think that's a question that investors are going to be looking at.
It certainly was yesterday.
Yeah.
Wasn't it? Pushed NVIDIA's share price and the share prices of some of the other companies involved a little bit higher in yesterday's session.
Yeah, I think it also brings up the idea that so many of these are private companies. Does this now, if we start to see a little bit of lightning in the deal glut, maybe some of these private companies go a little bit more public? We'll have to see, and then give NVIDIA a run for the money. Coming up, we're going to take a little bit of a pivot here. We're going to return to the Swiss Alps for a conversation with the Egyptian Investment and Foreign Trade Minister. That conversation live from Davos next. This is Bloomberg.
do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
This is the opening trade. We're at 30 minutes into today's session, seeing some green on the screen, not massive gains, but certainly marginal ones, a little bit of a reversal from what we saw just 30 minutes ago in the futures picture. But of course, it's not maybe the markets that are driving the news agenda this morning. JP Morgan's EMEA CEO told us earlier this week that the Middle East region appears to be a clear winner for investors. The optimism comes despite geopolitical tensions and global uncertainties, with Donald Trump returning to the White House. It's a key topic our very own Jumana Bersachi is following at Davos. Jumana.
Yeah, thanks, guys. Thanks for the intro. And interesting to see the JP Morgan perspective on the region. Joining me right now is Hassan Al-Khatib, the Egyptian Minister for Investment and Foreign Trade. Trade, obviously, very much in focus over here in Davos. With the return of the Trump administration, the touting of potential tariffs. And I've got to think, from your perspective, you hear that and you think this isn't going to be good for us.
First of all, it's a pleasure to be with you, Jumana, and with Bloomberg. I think on trade, Trump policies have been in action for some time. In his first term, we've got to know his actions, and he put tariffs on China and several other markets. And to be honest, actually, Biden administration did not revoke many of those tariffs. So what we're seeing is actually a trend that has started, in my view, almost 10 years ago. So the globalization as we knew it is, in my view, is a chapter that is actually fading away.
Yeah.
We're now in a new chapter, which is all about tariffs, borders, bilaterals will replace the global alliances or the WTO in nature. I still believe that the WTO rules should be the game, or at least the ground for trade. But in reality, most of what we see globally today is governed by the trade remedies, safeguard measures, monopolistic protection is the name of the game. All in all of these measures are inflationary in nature.
Yeah.
And that's what we're seeing. So globalization over the past 3 to 4 decades have produced massive economic growth globally, lifted hundreds of millions of people out of poverty. And the modus operandi, as we put it, was actually the most efficient way of production. Now, after COVID and after these measures that has been in action for 10 years and more of which will be in place with the Trump administration, we call it the resilience model, nearshoring, trying to bring it close. But all of these would mean that you're producing at a higher price, which is inflation.
Yeah, and interesting what you're saying about the push for bilaterals. I'll get to there in a second, but something else that I think is really relevant to Egyptian trade right now is shipping and the Red Sea shipping routes. You've got the Houthis saying that they're likely to stop the attacks now that there is a ceasefire in Gaza. What does that mean to Egypt? Because you really took a hit from all of the receipts that were coming through the Red Sea.
Absolutely right. I think the Suez Canal proceeds are down by 60 to 70%, which is massive. In a year like last year, it's a tough place to be in. I think with the ceasefire, we need to be cautious. We're cautiously optimistic. It's the first ceasefire that has been enacted for a long period of time, and it's still early to judge. I think the Houthis announced that they could stop their attacks on the ships. But all in all, I think we're cautious. We want to study it. We will talk to ship owners or at least ship liners, and we will try to see their line. It's not going to be an immediate switch back to Suez Canal as we envisage. What matters for us as Egypt, as we've been always engaged in the negotiation to try to bring this ceasefire, is how resilient that is and what follows, and more importantly, what follows.
Yeah. Let me ask you about the Egyptian economy. If we had been sitting here a year ago, the prospects for Egyptian economy were a little bit different. And then, of course, you had the big investment from the UAE into Egypt that turned things around. You had a series of reforms that the government started to introduce, a massive currency devaluation. How do you see the economic picture right now?
Let me give you the perspective of how we see the Egyptian economy, and I'll take it on a longer period of time. The Egyptian economy last 10 years followed two revolutions, 2011, 2013, almost 2 to 3 years of complete stoppage. The government stepped up its action to stimulate the economy. So the last 10 years title is a government-led economic growth. And in doing so, the private sector share in investments went down from 70 plus to almost 24%. This government mandate is to bring back the private sector, is to make sure that we have a business environment that is conducive for the private sector to prosper, to grow, and to lead the economic development. That's the title. This is what we're trying to do. And in doing so, we're clearly put forward what the investors would want, which are clear, predictable policies that are investor-friendly, that will bring the economy to a real competitiveness.
Yeah. I mentioned UAE with the big investment. I know that other countries in the GCC have also been engaged with Egypt, Saudi Arabia, Qatar. Can you give us an indication on some of the potential deals that could go through there?
I think the deals are always in nature a one-off. What we want is a sustainable growth. And that's why I go back to policies. The job of government is to put the policies that attract FDI, investors, make sure that the investors in them operating already in Egypt are doing well, and then we attract the FDI. And these are the monetary policy, the fiscal policy, the trade policy, and the role of the state policy. These are the 4 policies that we're mandated. I'm a member of the economic team, working closely as a team. But I go back to what you highlighted in terms of the evaluation that took place last year. The important is not a devaluation anymore. The importance is a monetary policy that is understood, that is investor-friendly. And that's what we have today.
Yeah.
This is part of the central bank role. But the central bank narrative today is very clear. For me, it's something that we can put forward to investors, and they would actually like it, because simply it's inflation targeting and a flexible exchange rate, which means that when you do a business in Egypt, you know that your currency will be always competitive rather than a fixing currency, and then after 3-4 years, then you're expecting a devaluation. Yeah. That's one policy that is clear. And so on, we can talk about the others.
No, I do want to ask you, I want to go back to what you were saying about bilateral trade deals, because I know Egypt has been in discussions with the EU, and obviously the EU are looking for different markets now for their exports. What scope is there, do you think, to get this across the line, and how much of a tangible economic impact do you think it's going to have?
We have an agreement with the EU-Egypt partnership, and it has been there for some time. The trade balance is actually in the favor of Europe. What we're trying to do now is to open a new chapter. Historically, we've been, again, the negotiation with the EU has always been, we've put certain limits on imports. On the case of Egypt, they actually complain about it. So actually, when I visited Brussels, what we told them is actually we're going to take all of these out of the discussion. We want to have a WTO guidelines, and we're actually having we're following the checklist of what we have. What I want a narrative, and actually the government we want a narrative whereby we will balance the trade, investments for trade. And when I traveled to many countries in Europe so far, Germany, France, Denmark, Norway, Northern Ireland, and our discussion is all about it's a win-win situation today. If you come today, if you look at the European competitiveness in manufacturing, cost of labor is possibly 10 times that of Egypt or the Mediterranean between Egypt and Morocco. But Egypt is very competitive today in terms of labor force, in terms of infrastructure, in terms of connectivity to the rest of the world. We're at the center of 3 continents. Africa is a huge potential. And we have the trade agreements that actually put forward the products for 70 markets. So the reality of the matter, that's what we told them. We tell them it's a win-win. Come and invest. We need your technology, but we also you can produce at a very competitive prices, and you can maintain your competitive edge. And that's the narrative that we're trying to put forward.
Fantastic talking to you. Thank you so much for taking the time to speak to Bloomberg. That was Hassan Al-Khatib, the Egyptian Minister for Investment and Foreign Trade.
Jumana, thank you very much indeed. Bloomberg's Jumana Basechi joining us from the World Economic Forum.
Let's talk a little bit about the other geopolitics around the world. President Donald Trump is threatening more financial penalties on Russia over the war in Ukraine. Trump said on his Truth Social network, President Vladimir Putin should make a deal soon or face more taxes, tariffs, and sanctions on Russian goods. Meanwhile, Ukraine's president says any effective peacekeeping force in Ukraine must include U.S. troops to support European allies. Vladimir Zelensky spoke exclusively with Bloomberg's editor-in-chief, John Micklethwaite, at the World Economic Forum in Davos.
It's great if we will have troops, but we have to understand that the troops will not be in the center of the capital. Yes, they will not have relaxed time. Yes, it's very important because I heard that some allies said that yes, but it's okay. We can be in the center of some city, and then no, we don't need such contingents. No. Yes, with our people, of course. Yes, because this means security, and that's it. So, but it can't be. It can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin? And do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had a phone call during the war. Not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin's economy, after sanctions, after everything, depends very much of China.
You would like Donald Trump and Xi Jinping of China to work together to push
I think
push
yes.
Putin.
Yes, but not without us. It's important.
Ukrainian President Volodymyr Zelensky speaking exclusively at Davos with Bloomberg's editor-in-chief, John Micklethwaite.
Coming up, we're going to head back to the World Economic Forum. We are going to bring you a live interview with Richard Noddy, the newly appointed vice chair over at Goldman Sachs. That conversation coming up next. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
I don't like to talk about deregulation. Rational regulation in our sector, in any other sector, could be good for growth. But if things go too far, then the Fed may have to hike rates and deal with inflation. Hopefully it doesn't happen.
Daniel Pinto, there's JP Morgan president on regulation and U.S. growth. Return to Swiss Alps now to join Bloomberg's Francine Lacqua. Fran.
Thank you so much, Cortina. I'm joined by Richard Nade, the newly promoted vice chairman of Goldman Sachs. Richard, first of all, good morning. Thank you so much for joining us. But look, a change of job, a change of title. How do you feel about it?
I feel fantastic. For the overall firm, it's a hugely exciting and energizing time. If I put it into a broader context, if I think about 2023, 24, it was really nailing the firm's strategy, which we've really got set. Putting in the organizational structure. But of course, people is the most important thing here. And we've now put in place, a broad set of leaders that can really take this forward, execute, and deliver over the next 5 to 10 years. And so that's what this is part of. For myself, I've given up my CEO responsibilities, for GSI, but I'm thrilled to, have the remit to really operate broadly around the world and spend time with our people, our clients, and I'm very excited about the next period of time.
So what's the one thing that Goldman has to do now? Is it talent retention more than actually getting strategy right, which actually has proven to be the right thing to do?
We've got to have the right people, and we've got to have the right culture. And if we get people and culture right, Goldman Sachs will continue to be a great firm. And so we focus on that day in and day out. We invest in it. This is part of that investment. The other thing I'd say is, we focus so much on making sure that we've got a deep bench. But there's no point in having a deep bench if you don't use it. And this is an example of us really, using that bench and bringing the next generation off. And there's going to be a huge amount of energy, and our clients will feel it, our people will feel it. It's an exciting time.
Are you expecting to also hire a lot more, given all of the animal spirits that could be unlocked in the U.S., and what does it mean for the rest of the world, including Europe?
Well, we always try and modulate this. It's easy to get carried away. None of us can predict the future. We all know how it feels right now. If you're sitting here and you're talking to someone from the US, it's huge optimism and enthusiasm. If you're talking to someone from Europe, it's a little bit less the case. And so we try and hire with a longer-term view. These are long-term careers. We're not bringing people in for the next 12 months. We're bringing people in for a career. So hiring in at the bottom continues to be hugely important. We do that whatever the cycle is. But of course, we're adding all the time to our organization. The organization is growing.
I haven't met one single person, almost, that's really optimistic about the UK or Europe. Are you?
No, the mood's not good. My takeaway would be, and we all know the numbers, so there's no point in or need to rehearse them now. The sentiment across the big cap, the big name European industrial companies, that CEO community, there's an increasing level of frustration because obviously they can see what's happening in the US. Frankly, a lot of them are investing significant dollars into the US. That's where the money's going. But they also want to invest and grow and build in the European economy. And so there's an increasing sense of frustration. And I wouldn't be surprised if we see that community broadly becoming much more assertive. Assertive with the regulatory framework, assertive in Brussels, in their own domestic capitals, and really leaning in. Because I think that everybody knows what the program needs to be. But I think people are done with the talking. People really want to try and push this into action. And if there is no response from the discussions, then one's ready. And I think we'll see more assertion going forward, I suspect.
Richard, how do you see client behavior? Are they going to spend more money? Are Europeans and international investors just going to be spending more money in the US, or are they staying put for the moment until they figure out what happens?
Both things are happening. So the opportunity and the returns are obviously there in the US, and we've seen the activity of this week. That's only going to encourage that behavior. So we'll continue to see capital flowing in that direction. But look, Europe is a very, very large and significant economy, and people want to participate here. So I think we'll see more restructuring. We'll see more consolidation. There's a real need across Europe to build global champions of scale that can compete globally. And certainly in our backlog and our client discussions, M&A activity, big strategic transactions, we're seeing, frankly, as much of that as I can remember. So I think things are going to move.
Private credit, what's your ambition there?
Well, as you know, we've got about $130, $140 billion of private credit sitting in our alternative asset management business, and we aim to double that. We want to get that through $300 billion, and then we'll take it from there. This is a really important source of financing for our client base, and they will continue to use it. We're obviously managing that alternative asset platform for investors. But if you're a user, if you're a corporate, you can go to the bank market, you can go to the public credit markets, and you can go to the private credit. And having that choice is important. It all ties into the capital markets union concept in Europe. We need to develop these markets. We need to develop the securitization market. Let's see what gets done.
I mean, what do you think Donald Trump's administration will unlock in terms of, crypto? Are we going to see a really big deregulation, which would also prop up private markets?
All I can say is if you're an entrepreneur and you're getting out of bed in the United States this week, you are full of optimism and energy. And whatever your chosen field, it may be crypto, it may be fracking, it may be just starting a business, you're going to be optimistic that you can drive something forward. So I wouldn't isolate it sector by sector. I think the energy will be contagious, and it'll be contagious across all parts of that economy, and I think that's what we're going to see. Now, we can't predict the future, as I said, so let's see how all of this plays out. Obviously, the markets themselves have anticipated a lot of this. Last year, the US market up 20%, it was up 20% the year before. That market's not going to grow 20% year in, year out. So, we need to have some sense of moderation in terms of where the market is. But the underlying energy across the economy, the economic growth, plus 2%, does it get to 3%? Time will tell, but there's a lot of energy there.
I mean, there seems to, equities are priced to perfection in the U.S. Should that be a worry when there's a lot of talk about inflation being a concern for the Fed?
Well, let's judge perfection with hindsight. It depends what happens. Maybe they're priced for perfection, maybe they're not. But obviously, rates are a huge focus. We've seen 100 basis points of rate cuts over the last 12 months. We expect another 50 this year, maybe another 25 in 2026. But the data is going to determine how that plays out. And obviously, if the economy is running really hot, it's going to be more difficult to have those rate cuts. The tariff discussion, we'll see how that plays out. If that is on the margin inflationary, again, that'll make it more difficult for rate cuts. There's a lot in front of us. And so, the range of outcomes is as broad as it's ever been. And I think both the left tail and the right tail, they're long and they're fatter than they've been. So I think one needs to be forward-leaning. The wind is at your back. But I think you need to be a risk manager at the same time and be looking left and right and make sure that, you're anticipating all the potential outcomes. They're all possible.
Is that your biggest concern, this kind of bifurcation, or trying to understand, the positive and the negative?
That's our job. Our job is to be ready for whatever the outcome is going to be, and we advise our clients in that way. We manage our own risks in that way, because as we said a couple of times in this discussion, the future is hard to predict.
Richard, in terms of the announcements that we've had, I think you've doubled the management committee. If you look at the numbers, more women would probably be welcome. What's the secret sauce on that?
Yeah, we continue to drive those initiatives. You're absolutely right. It's a huge priority for the organization. Our most recent partner class, which we announced at the end of last year, in our European partner group, actually 38% of that class was women. It was the highest number ever. Globally, it was in the high 20s. We would love to have more representation on the management committee. We will get more representation on the management committee, and we're pushing people forward. And I think if you look beyond the management committee and some of the recent announcements, there are a lot of very, very important jobs, which are going to women. The leadership bench there is growing in a very, very good way. We'd all like it to go faster.
Thank you so much for joining us. Richard Nadet, they're the Vice Chairman of Goldman Sachs. With that, I'm going to send it back to you in London, Guy, and we'll have plenty more throughout the day here from Davos.
Francine Lacroix at the World Economic Forum in Davos, talking to Richard Nadet. Thank you very much indeed. The Trump theme is definitely going to be very present at Davos today. What is it, 4 o'clock? He's joining
WEF. He's going to be addressing WEF, and there is going to be an opportunity within that for CEOs in Europe to ask questions. You had a great suggestion earlier about learning lessons from the United States about deregulation, that kind of thing. I wondered if you were going to ask a question about China, if you're a European CEO, maybe getting a sense of his evolving thinking around China, because it does seem as if it is evolving. He seems less aggressive on China, on the tariff side of things, on his impression of what they can do with TikTok and spying intention. So I think his evolving thinking on China and how it is shifting would be an interesting one to explore.
Yeah, absolutely, and just what the extent of that actually looks like, because he's already building on top of a farm deal that he had kind of pushed in his first administration, a farm deal that I'm now curious if he pushes on Europe as well. At least that was the comments he made in the press conference.
If I'm a European CEO, do I need to pick sides? Do I need to pick the United States over China? Is it zero sum?
Maybe you don't want to know the answer to that.
Well, we experienced this with NVIDIA, right? NVIDIA's already had to make one chip for the U.S. and one chip for everybody else, and that has already kind of undermined one of the world's largest companies.
Or for a European CEO, how much gas does Europe have to buy to make this whole thing go away? If we could just
Patrick Poyen's going to be the Total CEO apparently is asking a question, so that energy story is going to be front and center.
Yeah, and it's fascinating because that's exactly what is about to get deregulated in a very big way in the United States. The LNG story was one of Joe Biden's big points that he wanted to have more restrictions on, not less, as serving the climate agenda. We'll see if that ends up helping or maybe hurting the bottom line of Shell.
Okay. That wraps up the show. It doesn't really wrap up the show. The show continues. The show is definitely continuing. The Davos theme is going to be absolutely front and center. NATO Secretary General Mark Rutte is going to be joining us later. Nadia Calvino is going to be joining us. Ted Pick is going to be joining us from Morgan Stanley. The Saudi finance minister is coming up. You get the picture. There's a lot coming up, but we are building towards that Trump event a little bit later. The Pulse is next. This is Bloomberg.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers. You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Davos from the World Economic Forum annual meeting. Now, there's a lot going on. Donald Trump will address, of course, the plenary today with a lot of chief executives on stage. We'll get to that in a moment. But it's also very telling what markets are doing. So we've seen, actually, we're day 3 after inauguration, and we've seen stocks whipsaw a little bit. So a bit of zigzagging. Stocks definitely today taking a breather after gains since Donald Trump's inauguration had taken European and U.S. benchmarks close to record highs. Look, I'm going to speak very plainly. It feels like when you speak to chief executives from Europe and Davos, they worry. They worry about security, they worry about investment, and they actually worry about tariffs. When you speak to American chief executives, they're much more bullish about their outcome. Now, this hour, we'll speak to the NATO Secretary General Mark Rutte, the European Investment Bank President Nadia Calvino, and the Marsh McLennan President John Doyle. So Donald Trump, as we were saying, set to make this virtual address here at Davos today, just 3 days after his inauguration as U.S. president. It's fair to say it will be one of the most closely watched appearances at the World Economic Forum. Now, Trump's presidency and his plans have been dominating conversations here. Amongst his first orders were pardons for nearly all January 6th defendants and a reprieve for shutting down TikTok. Well, speaking on Fox News, Trump also downplayed the national security risk posed by the social video app.
I'll tell you, people want to buy it. People want to buy it.
But those that say they know say it's a spying app for the communist Chinese.
But you can say that about everything made in China. Look, we have our telephones made in China for the most part. We have so many things made in China. So why don't they mention that? You know,
Let me get to
the
some
interesting
issues.
thing with TikTok, though, is you're dealing with a lot of young people. So
they love it.
Is it that important for China to be spying on young people, on young kids watching crazy videos and things?
I don't want China spying on anybody.
No, but they make you telephones and they make you computers and they make a lot of other things. Isn't that a bigger threat?
Well, let's bring in Chad Thomas, Bloomberg's Europe executive editor, who also runs our Davos operations. Thank you for joining us, Chad. I mean, there's a lot going on, so we're all on Trump watch. There was a rumor yesterday that he'd come to Davos. We don't think he's coming to Davos. He'll be, of course, in the plenary virtually, but a lot of focus also on this Fox interview.
Yeah, in that Fox interview, it seemed like he was backpedaling a little bit on the whole shutting down of TikTok in the U.S. or that they have to sell it, saying it's not as big of a threat and it's something that kids look at. So it'll be interesting to see how it plays out. First, there was the reprieve that they got of 60 days to see if they can find a buyer, but now maybe they won't be pushed into doing that. The thing, though, to watch is there are a lot of people in his own party who say that this is a threat, and so he will have to get them on board as well if he does, in fact, decide to back away from actually making them sell their U.S. operations.
Yeah, it'll be interesting to say what he's addressing the World Economic Forum for, whether he's going to ask chief executives to do something for America, or whether he wants to talk about tech and AI and U.S. supremacy.
Well, it's kind of funny for someone who's doing a virtual address, who isn't physically here. As you said, there was a rumor that maybe he's going to show up here today. It's what everyone's talking about, right? And so that in that address, people will be listening closely to what sort of either demands he makes or requests he makes, and also then the questions from the chief executives. And it's a select group. It's 3 finance executives, 1 energy executive, 2 from the U.S., 2 from Europe. What kinds of questions are they going to ask? Clearly, that is something that has already been pre-discussed, and so it'll be interesting to see, given that that was pre-discussed, what is it that the message that he wants to get across in those questions that they ask? Of course, it's Brian Moynihan, Steve Schwarzman, Anna Botín, and the Total Energy CEO. They're all also people that President Trump knows.
Yeah, I mean, I guess there's a natural tension of chief executives wanting to have stability or knowing exactly what will happen, and to Donald Trump's negotiating tactics, making that, very difficult, certainly at the beginning of his tenure.
Yeah, it's interesting when you talk to people here. On the one hand, some have an excitement about things that his presidency might unleash and changes that might come. Other people who are nervous. I was talking yesterday with a couple of European prime ministers who were saying, right now we're going to just step back and watch and see what actually happens. Let's be clear, the European Union, if there are tariffs slapped on European companies, the European Union is preparing to retaliate, and those prime ministers were telling us that yesterday.
Jen, I mean, the other story, of course, it's AI. I mean, you can see it from now, it's AI everywhere, and we're really trying to understand what the relationship between the tech companies or the tech bros are. And there's been, one of the first, not the first, since the inauguration, one of the first spats with Elon Musk.
And really interesting, right? Like the President Trump makes this big announcement, and we all know he likes grand pronouncements. And then Elon Musk goes out on X and says, "I don't think they actually have the money to do that," and is kind of tweaking Sam Altman a bit. I mean, is it the first spat that they're having, and how is that going to play out? Certainly, President Trump would presumably not like that Elon Musk was doing that, but we're in new territory here, and we'll have to see how this is going to continue.
Yeah, I thought that was very interesting because it was definitely a dig at Sam Altman.
Yes.
But through that, you're basically kind of also unnerving POTUS.
Well, and it's interesting because is this also a repackaging of things that they were already going to do potentially anyway? That was what happened in the first Trump presidency. A lot of companies, I remember the German automakers, they were sending out press releases about their investments in the U.S., and I was looking at them closely thinking, but didn't we kind of already know that? But they did it, and then they would have an event with President Trump and say, look at all the money we're spending. And so I think we're going to see more of that as well, like making sure that they're showing the president that they are investing in the U.S.
Yeah, and I was told, look, you have to get in front of him to really try and show, look, Mr. President, that's what we're doing. Chad, thank you so much for joining us. Chad Thomas, there, Bloomberg's Europe Executive Editor. Now, coming up, President Volodymyr Zelensky says any effective peacekeeping force in Ukraine must include U.S. troops. Well, later this hour, we also discuss all of this with the NATO Secretary General, Mark Rutte. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
President Donald Trump is threatening more financial penalties on Russia over the war in Ukraine. Trump says on his Truth Social network that President Vladimir Putin should make a deal soon or face more taxes, tariffs, and sanctions on Russian goods. Well, meanwhile, Ukraine's president says any effective peacekeeping force in Ukraine must include U.S. troops to support European allies. Volodymyr Zelensky spoke exclusively with our editor-in-chief, John Micklethwaite, here in Davos.
It's great if we will have troops. But we have to understand that the troops will not be in the center of the capital. Yes. They will not have relaxed time. Yes, it's very important because I heard that some allies said that, yes, but it's okay, we can be in the center of some city, and then no, we don't need such contingents. No. Yes, with our people, of course. Yes, because this means security, and that's it. So, but it can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin? And do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had a phone call during the war. Not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin's economy, after sanctions, after everything, depends very much of China.
You would like Donald Trump and Xi Jinping of China to work together to push
I think
push
yes.
Putin.
Yes, but not without us. It's important.
Well, Ukrainian President Volodymyr Zelensky there speaking exclusively at Davos with Bloomberg's editor-in-chief, John Micklethwaite. Now, the Dutch Prime Minister, Dick Schoof, has told Bloomberg that it's important that the security of Europe be, quote, on top of the mind of President Trump, as well as for Europeans, and that the two sides maintain an open trading relationship. Well, he spoke exclusively to Bloomberg's Chad Thomas in an interview at the World Economic Forum in Davos.
It's very important that the security of Europe is on top of our minds and also on top of the mind of the new American president, and therefore it relates very strongly, of course, to Ukraine, and make sure that peace in Ukraine is with Ukraine and with Europe. And economically, it's very important that the open relationship and the open trade relationship we have is still in place. So we are looking very carefully at import tariffs and what that could mean for our trade and our companies.
Do you expect Europe to remain united if there becomes a tariff war? Obviously, that's not what anyone wants, but is there a worry that it's sort of every man or woman for himself and countries within Europe don't stick together?
Well, there's always that worry. But in the European Council, I think we have the idea that we should do it together, that's important, whether it's on the positive side in making sure that Europe is competitive, but also, you might say, on the negative side, if we have to react to what the Americans can do, and that's going to hurt our economy.
Are there discussions already taking place within the European Council of how you would potentially react if you had to?
Well, of course, we had some discussions about how could we react, and one of the most important things is that we should react from a strong position. I mean, Europe has a strong economy, has a strong competitiveness already, has a strong consumer base, so that's important for the United States as well. So that gives us a strong position, so you can really rely on a good discussion with the new administration and see how you can work out all kinds of deals.
You have a strategically important company based in the Netherlands, ASML. What do you expect from the Trump administration when it comes to ASML?
Well, I think that in relation to the China policy of the United States, and also when we look at the Netherlands, we are aligned, more or less. But when it comes to ASML, we have on a weekly basis, we have discussions, and we want to make sure that ASML, which is a very important tech company, and it's very important for the Dutch economy and also very important for the development of high tech in Europe and in the Netherlands, we want to make sure that that position is in place, and therefore we also made all kinds of arrangements with ASML and with the local government and the technical university to make sure that ASML can thrive, but also the whole community around Eindhoven, it's called Brainport, can thrive.
Dutch Prime Minister there. Now let's bring you some live coverage of a discussion here at Davos on what the future holds for Ukraine as a full-scale invasion by Russia enters its fourth year. Now the panel, hosted by Stephanie Flanders, are head of economic and government speakers, including Poland's Ukraine foreign ministers. Let's listen in.
Continuation of sanctions. There's a lot to do.
I think the term "nothing about Ukraine without Ukraine" has never been more important. Especially over the last hours with the statement of President Trump. And my next question would be, will this mean that those member states that have been perhaps more reluctant than others to continue pursuing sanctions on Russia will change course?
Sorry, do you think President Trump should give Viktor Orban a call? Is that all it's going to take?
Well, that's the first thought I had. Because if we are looking back and saying that the European Union has shown we can do this when things get really difficult, that the European Union has shown unprecedented unity, where it would otherwise have been impossible in the past years. And that unity was because there was a realization that Ukraine cannot fight this war with one hand tied.
Well, you can follow Stephanie's discussion on LiveGo, L-I-V-Go, on the Bloomberg terminal. Now, President Trump has called on NATO members to spend 5% of their GDP on defense. There's a significant increase from the current 2% goal and a level that no NATO country, including the U.S., currently achieves. Well, let's head to our editor-in-chief, of course, John Micklethwaite, with a very important interview. Hi, John.
Hello, Francine. Yes, I've got Mark Rutte, Secretary General of NATO, here. And I will start. Mark Rutte, thank you for talking to Bloomberg. In these very seats yesterday, Vladimir Zelensky sort of sat and told me that the one thing he wanted was American troops in Ukraine after any kind of peace is gone. His first preference, of course, was NATO, but his second thing was the necessity of having Americans there. Do you agree with that?
Can I be totally open with you? I'm not sure it is wise to discuss future peace deals through the media. I mean, if I was...
You're telling me that?
Yeah, but if you are Vladimir Putin, you sit in a reclining chair smoking your big cigar, and you can tick the boxes, yes or not, territory given up, yes or not, NATO, whatever. I mean, let's not do that. What we have to focus on is to get him, Volodymyr Zelensky, in the best possible position to start those talks. And what helps, for example, is what Trump did this morning, President Trump, in announcing, or yesterday, announcing this extra sanction package on Russia. That's the way forward.
And you think that could have a real effect?
Absolutely. If the Europeans will also help, they're doing a lot, but they could work with the Americans in conjunction. And then, of course, we also have to see what the Ukraine needs more in terms of weapon supply. I guess if the US continues that Europe has to pay more for those weapons, which is only logical. And of course, we have to spend more here in this part of the world on defense.
This morning, I think you said that this is Europe's problem. It's not Trump's. We shouldn't be blaming him for what's happening.
I hear many people here whining and complaining about Trump, and I would say the problem is not Trump or the US. The problem is Europe. The problem is Europe because at the moment we are not spending enough. Trump has also pointed when the US is supplying a lot of weaponry into Ukraine that we could pay more of the financial burden of that than we are doing currently. And he has always consistently been clear about the fact that he feels that we are under the US umbrella here and not paying enough for that. And luckily, thanks to him in his first term, we are paying more. But with the present level of spending, we will not keep ourselves safe.
If we can both agree that more spending would be good, isn't there a sort of bigger issue behind it? It's not so much the levels of spending, it's the way it's done at the moment. It's such a mess of competing people with competing tanks. Everything's a bit of a... Is there more to be gained by actually having more cohesive spending better done than the actual number?
No, it's and, I'm afraid. It is and a number, and it will have to be really, really much more than we're spending now in this part of NATO, and by the way, in Canada. So that those not on 2% this year have to reach the 2%. We cannot wait any longer, and then collectively we will decide later this year what exactly the new number should be, but it will be much more than a 2%. And you're right, at the same time, on innovation, on joint procurement, on getting the big contracts done with the defense industrial base, the defense industry. We have to be much better. And by the way, on this last issue, we also need the US to step up, because also the US defense industrial base is not producing enough. We are, from Europe now, spending 180 billion since 2022 buying from the US. That could be much more if the US produce more.
What about the idea that this is actually part of a sort of bigger contest? You've got NATO on one side, you've got Russia, China, Iran on the other. What is you've come into this job, what is your view of that set up at the moment, those two opposing forces?
I started 3.5 months ago. Two early conclusions. One, we are safe now, not in 5 years if we don't spend more. And second, on your question, this is not a conflict between Russia and Ukraine or Russia-Europe. It is really a geopolitical issue because of North Korea, China and Iran, and that's why we need to get to a good deal. And we can only get to a good deal if we don't negotiate through the media. And a good deal means that you will not have Putin high-fiving with Kim Jong-un and Xi Jinping and the mullahs in Iran. It's crucial that we come out stronger, that the US, the West is coming out on top.
And what about the way it looks? I mean, the amount of money we are spending on defense, on procurement, compared with what China and Russia, how do you think that stacks up?
It's a real problem, but there is an issue on spending. And of course, Russia is now spending 1/3 of the state budget on defense. Also, China is ramping up, but when you look at the output of the defense industrial base, China is producing now 5-6 times what the US is producing. As a collective NATO, we are producing in a full year, in terms of ammunition, which is crucial, what Russia is producing in 3 months. So this is not sustainable, and that's why I'm saying in 4 or 5 years we cannot defend ourselves if we don't get these two things right: the spending and the defense production.
Isn't the problem? I mean, you used to be the Prime Minister of the Netherlands for a very long time. Isn't the problem though how difficult it is to convert factories, weaponry towards things? Putin's got this huge advantage. He can simply take a car factory and turn it into making tanks or whatever.
That's true, but we have seen in the past that we can do it. Look at the United States in the Second World War, that when Roosevelt decided to enter the war after Pearl Harbor, that the US was able to ramp up the industry production because basically putting the whole of the US on a war footing. The minimum we now have to do is to move into a war mindset. Our mindset should be, we are not literally at war, yes, through hybrid and cyber attacks and assassination attempts and jamming of airplanes. There's a lot happening there, which we have to fight back on. But we are not in a real hard war at the moment, but we need to get to the mindset. And the mindset will then also make it possible for us to get on our industry base more on a war footing.
One last thing on mindset. Trump
all this rhetoric, tariffs, all these things, can you think of any military alliance in history that has survived with one set of people issuing tariff threats and things on others? It's very hard, I think, to think of that as an alliance when there's so much friction within it.
On the other hand, it also helps you to get these debates going. And I've seen some of the reactions come out of the European Commission saying we have to buy more oil and more LNG from the US. So they are reacting. They are stepping up. And when you look at defense spending, I mean, it is a big deficit in terms of Europe buying so much more from the US than the US buying from Europe. So it is a bit of a mixed picture. But in the end, that Trump is starting that debate is good. And he will always do it in his own way, which is with the door in his hand coming in. But that's okay, because that makes it possible for you then to come to an agreement. I'm not too worried.
Well, that's a good note to end on. Mark Rutte, thank you very much for talking to us. I will hand back to you now, Francine.
John, thank you so much. Now, let's also return, a great interview there, of course, so looking at some of what can be done the next 2-3 months feels very crucial. Let's also return to some of our live coverage of that discussion here in Davos on what the future holds for Ukraine with our Stephanie Flanders. Let's listen in.
Much more to ensure the security in our neighborhood.
But just on that specific, when are the budgets going to reflect that? Because if you can understand why President Zelensky would say, look, the US is the only one that has to be a fundamental part of these forces, because we don't see European governments seriously recognizing the things that you've just talked, this 21st century that you've recognized. Several governments haven't even been able to pass a budget, let alone start seriously increasing their defense spending. So do you understand why people just think it's not credible to be saying what you're saying?
I think that Europe has clearly said that it had realized this when in the strategic agenda that our leaders adopted last June, when President von der Leyen gave her speech in front of the parliament, there was a clear analysis of the fact that we need to do more. But once we realize that, we need to act, and we need to find a way to fund such extra efforts in terms of security and defense. This might mean some reshuffling of our priorities at the European level, and security is for any continent and any country priority number one. It also means activating or leveraging the ability of the European Union to finance such a build-up in security and defense. There have been proposals of...
You can follow that discussion on Live Go. Now, coming up, we'll be speaking to Marsh McLennan, President John Doyle, about navigating risks from geopolitics to climate change. That's coming up next, and this is Bloomberg.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never. Ready? Go.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges.
Was going to keep Green World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, everyone, and welcome to our special coverage live from Davos, from the World Economic Forum annual meeting of Francine Lacroix. Now, business executives and world leaders have been discussing the impact of growing global uncertainties, including geopolitical risks, the threat of climate change, and, of course, President Trump's policies. Now, in Los Angeles, the ongoing wildfires have also raised questions about the long-term relationship between climate risk and insurance. Well, I'm delighted to be joined by John Doyle. He's President and Chief Executive of Marsh McLennan. Thank you so much, John, for joining us.
It's great to be with you.
I mean, this year feels a bit strange, if I'm honest, because a lot of the participants are trying to figure out the Trump policies. You have the wildfires in California that, you know, just the amount and violence of it have really taken people by surprise. Like, what does your first thought go to?
Well, look, I think there's broad-based optimism, certainly from the American perspective, some concerns from Europe, but I'm excited about our way forward. There's great innovation happening all over the world. The cost of capital is coming down in important economies around the world, and so, you know, I'm excited about the way forward. But at the same time, there are big risks out there, and that's a big part of the work that we do is giving our clients the confidence to invest and the confidence to thrive in moments like this. And so, you know, you mentioned extreme weather, but you know, big geopolitical risks, of course, and economic challenges as well.
We're basically day 3 into the Trump administration, the second time around. What have you learned through the, you know, what we've heard in terms of executive orders? I know there's a real buzz in the Congress Center that Donald Trump will be addressing virtually.
Right.
Of course, the Congress Center with 5 business leaders also asking questions to him.
Yeah, I think he's coming on later today, so I look forward to learning more from that address. I don't think there are any big surprises. He had telegraphed, you know, what was to come this week, and so, you know, I think it's important for business to digest that, and not just business, but government leaders, and to sort out a way forward. And again, that's the work that we do. And so, you know, some of the uncertainties will start to clear up, and we'll know the way forward. But again, it's an environment with great promise, but it's a paradoxical environment as well. Great promise, but also, you know, big potential risks that could derail an organization or even a country's economy if it's not prepared for some of the downsides.
What are you expecting the Trump administration to do with insurance?
Well, I mean, it remains to be seen. And, you know, you mentioned the wildfires. You know, our hearts go out to the people of the LA community. We have many colleagues in the area, but clients in the area as well. And so our focus right now is principally around recovery and helping our clients through these moments. And so it's a very, very challenging time there. But as it relates to extreme weather, and, you know, California, of course, you know, is an area that's exposed to that, but there are many other parts of the world that are. And we need to build better resilience into these communities, better policies, both government-related policies, but also, you know, helping investors, homeowners better understand the risks and the possibilities around risk mitigation. And so that's an important part of our business as well.
John, how are you estimating, in terms of number, the insurance loss out of the LA wildfires?
Well, you know, it's an ongoing event, right? So, but our estimates have it north of $30 billion today. And of course, a new fire emerged north of the city overnight, which is obviously tragic. And so, you know, we'll see, you know, ultimately how that transpires over the coming days. But, you know, California needs real relief from the weather to really to stop this. But the economic loss will be much greater than the insured loss, likely north of $100 billion of economic loss. And so we can help communities prepare, homeowners prepare, and businesses prepare for those uncertainties and for those costs.
But the LA insurance market is already very fragile. Does this just, you know, does this break it?
Well, I think it's not just the LA insurance market. It's cat-exposed insurance markets that are under stress. I think it's an insurable risk, Francine, to be sure, but it'll be at a much better cost for investors and homeowners going forward if we can build better risk mitigation going forward.
But does that come also through regulation? Does the state have to step in? I mean, again, there's so many questions, right?
I think healthy regulation's a really important part of it, and healthy insurance regulation is an important part of that. But it's not just regulation; it's broader wildfire. In this case, wildfire management policy could be flood or wind-related mitigation efforts in other parts of the world. But having those policies in place, having buffer zones, vegetation management, a policy around how power is supplied to a local community, all of those things can build a better risk outcome going forward. And you know, today it's quite clear that the cost of risk is escalating, and that frustrates everyone.
But John, I mean, I recently learned that actually you basically have some of this mitigation for tornado zones, but not necessarily for wildfire zones. Will that automatically change, and also with the help of AI?
There are some communities that have effective wildfire policies and building codes in place today. It's not everywhere though, and you know, you hope, of course, to learn from these tragic events, and we can go forward and build back in a much better way. But that's going to require leadership at a local level, and of course, our industry has a lot of data and insight around catastrophes from all over the world that can inform those decisions.
I mean, what do you think of the FAIR plan? So this is basically the insurer of last resort. Does it survive this?
You know, it's not well capitalized. It'll need to surcharge in other insurers to be able to meet its obligations over time. I'm not an expert on the FAIR plan, but the industry sends important signals to investors about the cost. And it seems to me that the FAIR plan's pricing wasn't reflective of the risk in the environment.
We're also dealing with AI, which everyone's talking about here. We caught up with DeepMind. I mean, it's extremely interesting to see the way our society will change. What does that mean for the industry?
Well, that's part of what has me optimistic. I mean, not just in our industry, but broadly about economic growth in many industries and what it could mean to healthcare, for example. But as it relates to the risk industry, insurers and risk advisors like our firm are thinking about all the possibilities there to help use the extensive data sets that we have to, again, part of our work is risk financing in the placement of insurance, but really we're helping our clients understand risk and take steps to mitigate that risk. And these new technologies are going to help us do that.
What are you most excited about? Is there a technology that will, that will be more widely adopted than is now, that will be able to, if not predict weather patterns, give us a little bit more of a deep knowledge of how we can do it differently?
Well, I think, in terms of impact, I think cat modeling, the impact that these technologies can have on cat modeling going forward, and implementing more, in the case of climate-related, more forward-looking assumptions around cat risk, I think that can be an extraordinary benefit to the world.
Yeah, and is there a danger that actually the Global South gets left behind?
No, I don't think so. In fact, some of these technologies help me, help us think through how to better help those communities. And we've been innovating around product too in our industry. And in fact, even in the United States, where we've brought parametric-based risk financing to communities to help finance some of that protection gap that I talked about, even in a community like Southern California.
And that is expected to, again, be widely adopted by the industry. If I were to ask you, look, in 5 years, and I know this is an annual interview, so I'll speak to you 4 times until that, but in 5 years, what will be the single most biggest difference to the industry? What would you tell me?
Yeah, I think better cat modeling. And I want our industry to do a better job on the risk mitigation work up front, so that communities are much clearer about what the possibilities are. And so, that's an important role that we play, and I'm excited at how technology can enable that.
So interesting, John. Thank you so much for joining us. That was John Doyle, the Marsh McLennan President and Chief Executive. Now, one of the heads of state here in Davos is, of course, Javier Milei, the Argentine president, delivering an address. Yesterday, he also spoke to our editor-in-chief. It was a pretty interesting interview that I would urge everyone to go back and listen to. He pulled no punches. We'll also bring you some of our exclusive interview next. He says his government would leave the Mercosur bloc if necessary to get a free trade deal with the U.S. This is Bloomberg.
Will be condemned and likened to those committed in the darkest periods in our history. Uncovering this multitude of abhorrent practices is the eternal victimhood narrative, always ready to hurl accusations of homophobia, transphobia, and other fabricated terms, whose sole purpose is to silence those of us who dared to expose the scandal, one of which both national and international authorities are complicit.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. This week, live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage all week, only on Bloomberg. Context changes everything.
President Trump is now on top, as they say. He had a strong victory in the elections and is now taking steps directed at internal politics. The issue of ending the war in Ukraine must be, I believe, the victory for Trump and not for Putin. Putin is nobody for him. America is way stronger and Europe is way stronger. China is way stronger than Russia. They are all players.
Well, that was the Ukrainian President Volodymyr Zelensky speaking exclusively to our editor-in-chief, John Micklethwaite, here in Davos. Now, the Argentinian President, Javier Milei, says his government would leave the Mercosur bloc if necessary to cement a free trade agreement with the U.S. Well, Milei spoke exclusively with Bloomberg at Davos about why he sees the South American grouping as an impediment to opening up Argentina's economy.
We are working very hard on the possibility of entering into a free trade agreement. And in fact, when I recently took over as pro tempore president of Mercosur, I pointed out that Mercosur should move forward on three fronts. One related to the fight against terrorism, drug trafficking, and that is also easy to move forward on, bringing down the common external tariff, but also being able to make progress independently. In other words, that each of our countries should have independence to be able to work on trade agreements, because clearly Argentina has decided to become integrated into the rest of the world. It wants to go back to its golden era in history, where it was an important world player. And for that, we need to move forward on free trade agreements. We need to open up the economy, and Mercosur can't become an obstacle to that. Therefore, while we work with the US government to move towards a free trade agreement, we also work indoors within Mercosur so that it won't be an obstacle to move towards free trade. So we're working very hard on that.
Would you leave Mercosur to do a free trade agreement with America?
Well, if the extreme condition were that, yes. However, there are mechanisms that can be used even being within Mercosur. So we think that it can be done without necessarily having to leave Mercosur as such. And it's also worth noting this, because often when comments on the negative consequences of leaving Mercosur, reference is made to the automotive industry. But the automotive industry has an agreement outside the framework of Mercosur, so that is a false argument. So we are exploring ways for Argentina to be able to open up to international trade. And why? Because the division of labor brings prosperity. Adam Smith said so. And 250 years later, that holds true. Adam Smith is still right.
Well, that was the Argentinian president, Javier Milei, speaking exclusively with our editor-in-chief, John Micklethwaite. Now, Bloomberg also understands that U.S. Secretary of State Marco Rubio plans to travel to Panama as part of a trip to Latin America as soon as next week. It is reportedly scheduled to run from late January to early February and also includes Guatemala, El Salvador, Costa Rica, and the Dominican Republic. Now, the trip is expected to be Rubio's first since being sworn in and underscores President Trump's seriousness about taking back the Panama Canal. Much more to come. Here from Davos, this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Now, the Swedish Prime Minister, Ulf Kristersson, has told Bloomberg that the suspected sabotage attempts of undersea cables in the Baltic Sea linked to Russia's shadow fleet is unacceptable. He spoke with our executive editor for Europe, Chad Thomas, on the sidelines of the World Economic Forum here in Davos.
Regardless whether this is intentional or unintentional, it simply is unacceptable. We cannot accept that important fiber or electricity cables are put at risk because the vessels simply don't respect to protect them.
What actions do you think need to be taken then in the Baltic Sea to make sure that this doesn't continue to happen?
Well, the immediate action is what we are doing right now. We have much more surveillance. We combine civilian and military resources in a much more effective way. We have the ongoing NATO mission, Baltic Sentry, going on right now. So we also combine different countries, different resources to have a better surveillance, basically, and to pinpoint those vessels that we think could be part of the shadow fleet, for example, or acting in a way that raises our attention. In the longer term, we need to prove to countries that we simply don't accept bad seamanship or bad intentions going on in the Baltic Sea.
Well, that was the Swedish Prime Minister Ulf Kristersson. And the NASDAQ Chair and Chief Executive Adina Friedman says there's an opportunity for the exchange to work with the Trump administration on rethinking regulation requirements for public companies. Well, she spoke to Bloomberg's Lisa Abramovitz and Jonathan Farrow at the World Economic here.
We still have a challenge, a regulatory challenge, in terms of companies and what they go through as a public company. We do think there's opportunity to work with the administration to rethink some of the levels of regulation and requirements for public companies themselves and make sure that it's more balanced between being a public company and a private company. I think the second is, of course, on the financial system itself. And we've done a big study in partnership with BCG on what we call complexity versus complicatedness. There's a lot more complexity in the world, we know that. But over a 50-year period of time, there's been a 6-time increase in complexity across every industry across the world, but a 35 times increase in complicatedness. And that's really because you take a complex environment or you take a crisis situation and you regulate behind that, and suddenly you've got all this complicated work that you have to do, and you're racing to get it done, and you're not optimizing for the outcome. As a result, you've got a lot of layers of regulation. So we think that there's new technologies, a way of sunsetting regulations, thinking about regulations in a different way. We actually we do think there's a real opportunity there to make sure the industry can be a lot more efficient.
I want to drill into the first part of what you said. The idea that if you strip away some of these regulations,
it would make it easier and maybe even out the disparity between private and public companies. Do you think that that is the reason why we have seen a drop-off in IPOs, because of the extra regulation and how easy it is to get financed through the private markets?
I do think it's an ingredient. I would say that, there are probably several factors that kind of drive the balance between public and private markets and the swings that can happen. One, of course, is in fact, monetary policy, right? So big swings in monetary policy make public investors more cautious, change the way that they model companies. And that alone can make it so that you just don't have as many companies coming out. And I think the last 2 years or 3 years has been more around monetary policy. But longer term, the balance between public and private markets, I think, has been heavily impacted by regulation. You go public and suddenly you have enormous amounts of disclosure obligations in the proxy. You have it with the PCAOB in terms of accounting obligations. There's a lot of publicity around everything that you do, and there's a lot of public scrutiny around everything that you do. And then you, of course, have the quarterly earnings process, which, is difficult to navigate if you have a long-term strategy, but you have short-term milestones that you have to, continue to describe. So all of that just makes it a more complicated existence. I think some of that's just part of being a public company, but some of it in terms of proxy, there's a lot we can do in proxy reform. There's a lot we can do in accounting and disclosure reforms, and of course also litigation reform that I think could really make the nature of being public a lot more attractive.
Adina Friedman, their NASDAQ chair and chief executive, speaking to Bloomberg's Lisa Abramovitz and Jonathan Ferro here in Davos. Now, fire crews are making progress on blunting the threat from an enormous new blaze north of Los Angeles. A huge fire erupted before 11 a.m. local time. It said expanded quickly to more than 9,000 acres, leading to evacuation orders and warnings across a broad area. Now, the wildfire has stoked fresh fears in a region already devastated by deadly infernos that have killed at least 28 people and destroyed nearly 15,000 buildings. Now, parts of the southern United States have seen their worst snowstorm in 130 years, with as much as 10 inches piling up in New Orleans, smashing a record of 2.7 inches set in 1963. While similar accumulations of snow were recorded in parts of Florida, with more than 4 inches hitting the Houston area. Airports struggled to keep up with the weather, with flight cancellations across many airports. Now let's get back to some live coverage of a discussion here in Davos on what the future holds for Ukraine. Let's listen in.
Post, in order to be part of this, the European also has to have an or else and has to be doing that. Whether it's, what are the tools that you could turn to? We've talked about the assets, but is it sanctioning of third country banks? Is it further energy sanctions?
But here actually, I'm the former foreign minister for almost 12 years, so I know how all those foreign affairs council discussions sometimes happen, and I'm sure nothing has changed since I left.
Well, you can follow, of course, that discussion on LiveGo. Now, we have plenty more great interviews coming up from Davos today, including the Arkansas Governor, Sarah Huckabee Sanders, Morgan Stanley Chief Executive Ted Pick, the Saudi Finance Minister, Mohammed Al-Jadaan, and the Iraqi President, Abdul Latif Rashid. Coming up on The Pulse tomorrow, we also speak to the EU Economy Commissioner, Valdis Dombrovskis. This is Bloomberg.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you were the first first woman, as I understand it, the first woman to own three major, have stake in three major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me. And I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
On the brink of record highs, stocks pause. Another round of jobless claims on deck. Downplaying risk, President Trump brushes off national security concerns regarding TikTok. And the president scheduled for a virtual address to world leaders in Davos on day 3. Good morning, Menace.
Danny, can't wait for that presentation to Davos. Now, these stocks were up 3.5% so far this year. This is the best start of the year since 2019. Deutsche Bank ran the numbers. We're just pausing for thought this morning, down 0.5% Some of those big tech alphas of yesterday just pause. Jamie Dimon says U.S. stock prices have kind of inflated, but we can see Bank of America's private clients' net purchases for the 11th week in a row. Bond market, they lapped it up, they snapped it up to $13 billion of 20-year paper, flat at the moment, 461, 275 bid to cover ratio. That certainly beat the average over the past 6 months. Listening to Bridgewater yesterday in Davos, it could be a false dawn in these bond markets in terms of the push higher in these yields. And Larry Fink, of course, warns the biggest risk is to believe that inflation might be past the peak.
Well, markets brushing off risk, taking a pause. There are some individual stocks on the move this morning. One of them we're keeping our eye on, EA, that is falling in the pre-market session. The entertainment company down nearly more than 13.5%. It cut its net booking guidance for the full year to a range that was below analyst expectations.
Alaska beat on its estimates in the fourth quarter and forecast better than expected start of the year, giving the carrier a boost as it plans significant overseas expansion, up just under 4%.
And GE Aerospace is expected to continue its run of positive earnings when the manufacturer reports its fourth quarter results before the market opened, but anticipation shares lower by 1.5%.
And coming up this hour, we are live to Davos, conversations with the Belarus president-elect and Trip.com CEO Jane Sun. But first up, President Trump downplayed the risk to national security posed by the Chinese social media giant TikTok. Speaking yesterday in the Oval Office, the president suggested electronics made in China carry a greater spying risk than what he called kids watching crazy videos. Well, Kevin Whitelaw joins us now to discuss. So, Kevin, this is about paving an easier road for a deal, really, isn't it, for TikTok? And it shifts the narrative in terms of how do you define national security, doesn't it?
Well, you know, obviously, Trump is, is the master of redefining what he wants to think about national security or any other issue throughout the years. In his first term, he led the charge against Huawei and citing all kinds of risks from Chinese technology. So what's changed this time? Well, I think he discovered that he can reach young people on TikTok, and he and others credit TikTok with helping him to improve his stature going into this election with young people. And so suddenly TikTok is not a security threat. So I think sometimes it can be that simple. So it's not clear that there's been any new security assessment or intelligence assessment here. It's Donald Trump's assessment of TikTok that's changed.
Fair enough. I mean, it's almost this carrot and stick approach with China. The carrot maybe being allowing TikTok to continue on in a similar form to it is. Elsewhere, Kevin, we had this big announcement that got everyone excited with Stargate, with OpenAI, all of these AI players coming together. But what it turned into was not a victory lap for Donald Trump, but almost a kind of comical public display of what billionaires fight about, with Elon Musk and Sam Altman disputing on what actual funding there is. What are the details, and what is this rift? There's Elon Musk's tweet. They don't actually have the money. Show us about how these sorts of things will evolve in this administration.
Well, you know, this is, again, a replay of things that we saw happen during Trump's first term. You know, he likes to make these big dramatic announcements. He likes to get big dollar figures in there. He likes to get people together. But the announcement doesn't mean that anything's actually happened or that anything's necessarily new. And so then it takes the next days, weeks, and months to figure out whether there's any there. And so I think we're still trying to pick through and understand what really was agreed to that's new. Some of this appears to be collecting together some funding and projects that were already in the works. A lot of it seems to be aspirational and doesn't yet exist. And obviously, having Elon Musk, the Trump close advisor, raising questions about Trump's own announcement suggests that that's going to be a complicated relationship going forward, as Elon Musk is not somebody who tends to, keep his opinions to himself.
Yep, one to watch. Kevin, thank you so much. Bloomberg's Kevin Whitelaw. Now, the World Economic Forum at Davos is in our third day. Let's head over now to Bloomberg's Francine Lacqua, who is joined by the president-elect of Belarus, Svetlana Tikhanovskaya. Francine.
Thank you so much. I am delighted there with, of course, speaking to the leader of the opposition, Belarus. Thank you so much for joining us. Look, there's a lot going on in terms of security with also the Trump administration, but Lukashenko is holding new presidential elections on January 26th. This will most likely extend his rule for a longer time. How do you see this playing out?
What you call elections in the democratic world has nothing in common with elections in Belarus, because it will be imitation, it will be farce, it will be like ritual for Lukashenko, and the only intrigue about these so-called elections is what number will be in the final ballots. It will not change anything for perception of Belarusian people of this regime illegitimate, and of course we urge our democratic allies continue the policy of non-recognition of this regime.
So what do you plan to do about it?
What do you mean what to do? We are going to do about this? We are not going to recognize, people in the country continue to resist undergroundly. Those who are in exile, we continue to make this regime pariah and call for political, economical, diplomatic isolation of Lukashenko's regime. But on the other hand, supporting, trying to strengthen the Belarusian movement, Belarusian people, our civil society, our media, our agents of democratic forces. And I'm so grateful to our allies that they continue to work with democratic forces like representing Belarusian people and not with Lukashenko's regime.
I mean, there's been a lot of talk about security changing, of course, in Europe because of the second Trump administration. How do you see that changing?
The USA was always a beacon of freedom and hope for nations who are fighting for democratic changes. And I want to believe that the USA is a country, they will stay principled in the support, in the perception of dictators. And of course, I feel a little bit of uncertainty, during this forum, what's going to happen then. But what's important for us, Belarusian people, is to stay independent country, because now Lukashenko, illegitimate dictator, selling our sovereignty and independence to Putin, and so there are so many talks about possible negotiations about Ukraine and Russia. We need to make sure that Belarusian issue is also raised during these negotiations, because we are of strategic importance of the peace and security in the whole region, and without democratic Belarus, there will be no stability and security in Europe. So if President Trump says that America first, I think that free and democratic and independent Ukraine and Belarus are in their interests as well.
So there's no question in your mind that actually the future of Ukraine also, I guess, changes the future of Belarus.
The changes in Belarus, of course, in much extent depends on the victory of Ukraine, because if from the conflict this war will be frozen, it will be status quo for Belarus for many, many years ahead. The repressions will continue. Political prisoners are behind the bars, so it will be more difficult, for us to get this window of opportunity for the changes. But again, no one war and no one fight cannot be won when you are alone. We need allies. Ukrainians, of course, need allies. They need to give everything possible, to win this war. They have to be in the strongest position during this negotiation. And actually, of course, our country is also looking on Trump's policy, what's going to happen. And do you think it's in Trump's can talk in the language of ultimatums? Leadership is also about possibility to talk to dictators on the language of strength, and you have such possibility. So leadership is when you show that dictators are afraid of you, that they can listen to you. So this is about leadership. So we are waiting for strong actions, not betraying, of course, interest of Ukraine and Belarus.
Do you believe this is a very delicate time because Belarus could be used through Russia to actually attack other countries?
Of course, while Lukashenko is there, while he's puppet of Putin, our territory can be always used for attacking our, not only Ukraine, but also our western neighbors, Poland, Lithuania. We already see deployment of nuclear weapon, orchestrating a migration crisis, different provocations on the borders. It will be endless until Lukashenko is there. So that's why, in Belarus, democracy should come, and this dictatorship should be dismantled. What Belarusian people are afraid of now, that maybe at the moment of this peace negotiations about Ukraine, Belarus might be given as, cancellation prize to Putin, as like bargaining chip. And we need powerful leaders of this world, to stay with Belarus and demand its independence.
But Lukashenko is claiming that he's also hosting Russian nuclear weapons in the country. Do you believe that to be true?
Look, we have no real proofs that nuclear weapon is already there, but facilities for nuclear weapon is in our country. And of course, it's one more step of Russia to anchor their presence in Belarus for many, many years ahead. And just in case of using this weapon, this reconciliation attack will be on the territory of Belarus, so not on Russia. So it's like usage of our country, of our nation, with the help of Lukashenko, against the will of people.
What role do you see Belarus actually playing in European security if democracy returns?
Look, I think that the European Union project will not be completed without Belarus and Ukraine. Only independent and European Belarus and Ukraine can be reliable partners for our Western neighbors. So that's why don't look at assistance to democratic forces of Belarus or Ukraine as charity. It's your investment into your own security. We are fighting not for our pieces of land, for our nations. We are fighting against brutal dictatorships that are already threatening your nations as well.
How stable do you think the regime of Lukashenko is right now?
They might seem like monolithic and stable, and of course they are backed by Putin. But believe me, dictatorship are not immortal. They are very unstable inside, and we see how many informants and allies we have inside the regime who providing us different information, and we see that people in the regime, they hate each other, they don't trust each other. So any volatile situation will
break everything. But could you see a fall like we saw Assad in Syria?
Look, it might be like this. It might be internal coup d'etat. It might be this moment of opportunity might be connected with the Ukrainian victory or some economic issues. But our task as people is to be prepared for this moment, to be as strong as possible, to have strong society, strong free media, and to have weakened regime, weakened through sanctions, through political isolation. And you gave this Assad example. It was like a lesson for Lukashenko as well, that at the moment of turbulence, your ally, Putin, might not come and save you again if you are not in his interest anymore.
Thank you so much for, of course, a very important conversation as we talk a lot about security here in Davos. Manos, with that, I'm going to send it back to you in New York. And, of course, we'll be talking throughout the day a lot about security, NATO, and what the new Trump administration will do.
And, of course, you will hear from the president himself, Donald Trump, later in the day. Francine, great to see you this morning there with Svetlana Tsikhanouskaya. And just a correction, as she was speaking with the leader of the opposition in Belarus, who has been in exile since 2020. Quick check on these markets, Danny. I mean, we did make a moment yesterday, one of our first record highs on the equity market. We just seem to have paused for breath this morning. Although yesterday there was a real sense of animal spirits. I mean, the narrative from a lot of these executives is roaring 20s, animal spirits, get ready for a big regime change.
I think something that underscores that, Max Kettner and the team of HSBC this morning just putting out a note calling it Goldilocks on steroids, saying if you're looking for a note on U.S. politics, we're afraid this isn't it, saying we don't see it as a big game changer. Uncertainty is just uncertainty, saying that the Goldilocks backdrop comes from U.S. disinflation and growth continuing on. So that's even besides the politics. Again, Max Kettner has been bullish for some time, but again, calling it Goldilocks on steroids for the first half of this year.
Yeah, it depends where you are in valuations. I think the best line out of Jamie Dimon yesterday was very much get over yourself and get on with it, which is, worried about Trump's tariffs? Get over it. Let's have a look at the dollar, because at the moment it still believes there's going to be a few issues around tariffs. It's interesting. Larry Fink, when you look at euro dollar, 104.14, one of the best lines I saw yesterday. Larry Fink never saw such pessimism over Europe. That makes him think it is time to invest in the region. The euro is flat at the moment, 104.14, and we're counting down to BOJ tomorrow.
Yeah, the expectation is that they will hike. If they announce a 25 basis point hike, which is what's expected, that will be the biggest hike since 2007. You've seen a steadily stronger yen as we build up to that. We're currently at 156.26. But again, currency markets really calm this morning. And again, this calm belies what you would have expected in the first week of a Trump presidency. The expectation was executive order after executive order, things to shake things up. We haven't necessarily gotten that. We've gotten ideas floated, but nothing concrete. And that's allowed some markets like Europe to hit new records in their equity market, for the euro to trade at 104.
Yeah, but still the voice is coming through. If you listen to the sort of the roll call of guests at Davos yesterday, Bridgewater saying that the dollar has more room to run. Your risk going into Bank of Japan tomorrow is, of course, that it is a dovish hike, and that just slows the trajectory on the yen. We've got a few other stories trending on the Bloomberg Terminal.
Yeah, let's get to those. And we start in Los Angeles, where fire crews are making progress on containing the Hughes fire north of Los Angeles. They expanded to over 10,000 acres and are now 14% contained. Stronger winds are forecast, and red flag warnings have been extended through Friday. Critical fire weather conditions are expected to last through today.
Saudi Crown Prince Mohammed bin Salman told President Trump that the country is willing to expand its investments and trade with the U.S. in the coming 4 years by $600 billion. That's according to the news agency SPA. He said the kingdom was eager to seize partnership created by the new administration's anticipated reforms.
Bloomberg sources tell us that Secretary of State Marco Rubio is planning to visit Panama as soon as next week. It will be Rubio's first incursion since being sworn in and confirmed. It also highlights the president's focus on taking back the Panama Canal and stopping the undocumented migration that runs through Central America.
Let's get back to Davos. Bloomberg's Rebecca Chung-Wilkins is sitting down with the CEO of Trip.com. Rebecca, good morning.
Good morning from a very snowy Davos, Manos. Yes, we're joined by Jane this morning. Thank you so much for being here. I want to kick off thinking globally, just to begin with. We have seen in many parts of the world the global tourism industry really bouncing back to pre-pandemic levels. Tell us, what are some of the trends and dynamics that we should be looking out for in 2025?
Yeah, for travel after COVID, it's really ramping up nicely. People will consider three factors before they make their decision where to go. The first one is safety. That is always the focus for travelers to make their decision where to go. The second one is visa application. Countries which give travelers free visa normally attracts the most of the travelers. The third one is direct flights. After COVID, lots of airlines are recovering very nicely. So we look forward to further recovery in 2025.
One point of discussion that we've had at Davos this year has been about the impact, though, of the return of tourism on local communities. How is that impacting your business, and what measures are you taking?
It's huge. As you know, travel contributes to 10% of the global GDP and contributes to 11% of the job opportunities around the world. So when we bring travelers from one region to the other, they will buy stuffs, they will eat, they will stay, so they bring dynamics into the local communities. It's very important for local small and medium-sized businesses. It's very important for job creation.
What about some of the concerns about the more negative impacts on local communities? How does that affect how you approach?
Lots of top-tier cities are addressing the unbalanced tourism. For example, during Christmas, everyone comes, so it's very crowded. During certain holidays, everyone comes. So what we can do is really compare the calendar from different communities. For example, Western holidays, Christmas is peak. Chinese holidays, Chinese New Year is peak. And Deepavali for India is a little bit in the spring. So if we do it smartly, the unbalanced tourism can be addressed.
I want to think about some of that core business for you, really China, Asia dominating. I have to ask you about the Chinese traveler in 2025. Where are they going, and where have you seen the biggest shifts in their sort of dynamics and travel patterns?
Yes, the travel trends, we classify them by giving them the name 3 E's. The first E is events plus travel. So young people really wants to go to Taylor Swift shows. So events-driven travel is very important to attract young audience. The second one is elderly-friendly travel. So in Asia, the retirement age can go as early as 50 to 60 years old. These people have money, very energetic, very healthy, very curious to travel around the world. So we have been advising our partners in different countries to provide elderly-friendly products. And these people can also go during the slow season to avoid the overcrowdedness in certain regions. So we're developing lots of products for that. The third one is eco-friendly. So people, no matter they're old and young, wants to have an option to select products that's more eco-friendly. For example, when they rent a car, we promote electronic vehicle. For hotels, we recommend our hotel partners to install solar panels. Those are all very important for customers to have eco-friendly products when they choose it.
And when we think about that sort of Chinese outbound traveler in particular, I know November, December, we saw sort of this increase in Chinese travelers tending to go short haul to other destinations in Asia. And of course, there is still this pressure of consumption in China. You know, the consumer confidence has been sort of recovering, and it's still struggling to bounce back. How is that impacting the way that Chinese travel through the end of last year and in going into this year? What are you expecting?
Yeah, sure. China has 4 short holidays: spring break, May 1st, Labor Day weekend, Dragon Boat Festival, and Mid-Autumn Festival. During these 4 short holidays, normally people will combine a weekend and travel nearby quite closely within Asia. We also have 3 long holidays. The first one is Chinese New Year's holiday. The second one is national holiday in October. And the third one is summer holiday. During these 3 long holidays, people tend to go far. So they are very interested in going to Middle East, Europe, Americas, Africa, Australia, New Zealand.
And thinking about, you mentioned safety being a primary concern when travelers are thinking about where to go. We recently had this case in Thailand, quite a high-profile case of a Chinese actor who was kidnapped, linked to some of these trafficking scams in Southeast Asia. I just wonder, do you think that these anxiety about the cybersecurity, the trafficking safety risks in Southeast Asia, are you seeing that dent appetite from Chinese travelers?
I think the world is very big, so people will choose the location based on how safe they are, how friendly they are. So if the government can address these issues very quickly, consumers' confidence will be rebounded. For example, many years ago, Las Vegas had a shooting, but once the government get the criminal off the street, very soon it's recovered. And tsunami in Japan had a nuclear impact. And after a couple of years, that's also winding down. So I think how fast, how effective the government is to restore these destinations become very critical.
And outside of that core business for you, where are you seeing the biggest growth? And a final question, where are you going on holiday this year?
Yeah, we seen that customers are very adventurous. They want to go to long-tail travel destinations. Last year, during Chinese New Year, the top 3 travel destinations are Australia, New Zealand, and South Africa. South Africa is very far away from China, yet people are very curious to go there. So I'm very interested in going to explore many countries. I think in Africa, that's always dreamland for me. You know, the Africa safari is so attractive, and also to go to the very remote island is also very good. Last year, I went to the South Pole, very far away from us. It's a lot of fun.
Okay, so maybe somewhere warmer for you for the rest of this year.
Sure.
Thank you so much, Jane. Danny, back to you in the studio.
Rebecca, thank you for that wonderful conversation. Rebecca Chung-Wilkins, I think looking at that snowy backdrop, we're all dreaming of being somewhere warmer this morning. Okay, let's get you some front page news this morning. A look at what's making headlines around the world. First up, the New York Times leads with President Trump cracking down on DEI at the federal level. Workers are being told to report on colleagues that are trying to defy the orders of purging their diversity, inclusion, and equity efforts. Employees are being given 10 days to report their observations to a special email account without risking disciplinary action. All the websites also for those DEI pages are currently shut down.
Well, next up, the Journal leads with reports a rare winter storm along the Gulf Coast and the southeast has left record snow, freezing temperatures. More than 8 inches of snow were reported in parts of Florida. Temperatures reaching as low as 6 degrees in Mobile. Alabama tying a record there since 1899. If you thought you were a snowbird and flying south, think again.
And some of those images, like the French Quarter in New Orleans, buried under snow, really incredible. Well, Bloomberg has this. President Trump is set to deliver a virtual address to Davos today. The anticipated speech, which I think is about 11 a.m. Eastern time, will be followed by questions from the World Economic Forum president and select chief executives. If you want to know who's on the list of who gets to ask Trump a question, it's the Blackstone CEO, Steven Schwartzman, and the Bank of America CEO, Brian Moynihan. I'm interested to know, Anna Botín, by the way, of Santander, I'm interested to know what they will say and whether it's just going to be like, we're so excited for you, Mr. President. How can we work together? What money can we put into the U.S.?
How can we grow our business in the United States of America? Saudi Arabia chipping in with $600 billion. Steve, what are you going to look like with your checkbook? On the front page of the WEF website, analyzing the political vibe shift as the U.S. president takes office again. So it's a vibe shift and animal spirits. Depends who you talk to.
Well, it is for the U.S., but Europe. Christine Lagarde addressing Davos yesterday, saying it wasn't pessimistic to say that Europe is facing an existential crisis, a completely different conversation there. Coming up, we're going to head back to the Swiss Alps and have a conversation with many chief executives. DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turns a profit. Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From our global headquarters in New York City, welcome back to Bloomberg Brief. Danny Berger and Manish Krani here, and it is another busy day at the World Economic Forum. We will take you live to Davos, but first, let's get a check on these markets. No drama to be seen here. We are 0.06% away from another all-time high for the S&P 500. As far as it goes for the future session, doesn't look like we'll get there. Things continue on as is. Slightly weaker this morning. NASDAQ 100 takes the losses down 0.5% after the AI enthusiasm and Netflix bonanza of yesterday after those earnings. Strong earnings all around. Bond market also extremely calm. Again, if you were to say, what would markets do in the first week of a Trump presidency? This is probably not what you'd expect. We're just grinding higher, but a basis point here, 2 there, 4.6% on the U.S. 10-year yield. Max Kettner of HSBC this morning putting out a note at around 5 a.m. saying it is Goldilocks on steroids, and it is not because of the politics. He goes out of his way to say this is not a note about politics, saying that it is the growth backdrop. It is U.S. disinflation that is going to carry this. And again, you've seen that in earnings, man. I point to P&G earnings yesterday. For the first time since the post-COVID period, they had a sales growth that wasn't promoted by prices increasing. They had just normal growth. It wasn't about margin this time around. Maybe that shows actually disinflation, at least in consumer goods, is here, and there's still strength.
Then you just flip it over onto Netflix and you wonder, okay, so they've actually managed to up their prices right the way across the system. And nobody really notices. So it's about the elasticity in certain in services. I mean, you can call watching a movie, watching a Netflix is a form of service absorption. So service price inflation, it's still there. But will it dissipate? And Neil Dudda says he's more convinced that the inflation is here to stay. He's less convinced, he's more convinced that the inflation will drop. Yeah. He's less convinced that the growth will stay. And I think that's an interesting juxtaposition because he's talking about real services and real goods dropping down. But I love Mac's notes. It's great. Extremely supportive Goldilocks.
Yeah, I mean, he is extremely bullish. Okay, as promised, we're going to head back to the Swiss Alps. Let's head over to another panel that's taking place on stage, where Bloomberg's Jonathan Ferro is speaking on market divergence. On that panel, the governor of the Bank of Spain, General Atlantic CEO, TCW CEO, the NYSE president, and the president and CEO of JLL. Let's listen in.
So I should probably reveal my biases that I'm American, but I'm going to answer the question just from a capital markets economic perspective. And we were talking a little bit about this in the room before we came out. But America is 4% of the world's population, 20% of GDP, and Lynn's more the expert at this, but about 68% of world market capitalization. So that's pretty exceptional, I think, when you think about share of productivity. A more interesting question is probably whether that's sustainable. And what I'm struck by, I agree that there's a lot of optimism for the U.S. That's clearly a takeaway from this conference. And the one thing I'm just kind of concerned about is that, yes, I believe all these things. I believe that the U.S. it has been and will continue to be a better place to do business, and we can talk more about that. I believe that there will be deregulation with this administration, that there will be a restart of the M&A cycle, animal spirits will be released. That's all amazing things, and it's very likely that will happen, but the market's already priced up and to the right. And so that actually brings with it a lot of fragility and risk, and not a lot of room for error. So maybe the good news is all that great news will support us at high valuations, and just people may be aware of this, but to be specific, we have a negative equity risk premium right now in the United States. That's one of the reasons that it's 70% of world's market cap. So that's what really gives us pause, is that yes, all these things are happening, but I come from the world of money management. And in order for us to make money for our clients, we have to be able to translate that great news into great returns, and that's difficult to do from these valuation levels.
Bill, are things getting harder or easier?
I think they're going to get a lot easier, particularly for IPOs and M&A. One of the things, I'm in the private equity business, and we invest in private markets, but we need great public markets too. And one of the most challenging things we've faced the last 3 years is really an M&A drought, and a very, maybe the most difficult IPO market we've had for the last 2 or 3 decades, I think. And I think we're going to see a rebound in both. I think, you know, sort of a regulatory rollback will be good for IPOs. There's plenty of companies that want to go public. I'd like to say there's a triple win. Companies can access the public markets to raise capital. They can create opportunities for the public to invest in some of our most exciting growth stories, and we can create liquidity for the $10 trillion of private capital that are trapped in or invested in private companies.
Len, you wanted to jump in?
Completely agree with what Bill and Katie said.
I thought you might.
I mean, it's a great opportunity at the moment for companies to find a strategic alternative that are private. I think the M&A markets are going to heat up because of the regulatory opportunity that exists for this administration to allow the more free-flowing of strategic M&A that has been a bit pent up over the last couple of years in particular. IPOs we're incredibly optimistic about. We've already seen some IPOs. We've got a relatively large one on the road at the moment that we're excited to bring the market tomorrow. So I'm optimistic. The one area that I think all of us in the U.S. are looking at, though, is the deficit, inflation, all of the underpinning economic factors. It does feel as though President Trump is very focused, along with his cabinet, on continuing to showcase the American economy and the growth in the American economy. However, you know, there are some things that needed to be sorted out, particularly inflation in light of proposed tariffs, considering tariffs tend to be inflationary in nature. That's an equation that will have to be worked out. The overall deficit that we run in the U.S., the debt levels that we're running at, pretty high. That's another area that needs to be looked at. However, every incoming administration has challenges to deal with, and this one feels as though they're going to take it and have the economy in front and center.
This is exclusively the American perspective, so let's get the European view.
That's a good idea.
On things. Christian, can you share that optimism when it comes to Europe?
Well, from a European perspective, it's probably a bit more challenging than if you were to put it on your, or if I put on my American hat. Europe is obviously in a very slow growth environment. The largest economies in Europe are actually in recession. And we see this bifurcation on the monetary side, where in the US we are wondering whether interest rates can continue to come down or whether they will actually go up again, versus from a European Central Bank perspective, and we have somebody who is probably more knowledgeable to talk about it, but the likelihood that we will see interest rates in Europe to come further down in 2025 is very high, just because of the economic slowness we see there. But you know, going back to those stats around 4% of the population and 68% of the market cap, I mean, think about the opportunity we have if we take that US exceptionalism and use it to increase actually the wealth of the 4%, but also the wealth of the remaining 96%.
Whether that wealth will spill over is quite a question. The incoming president, the new president, Donald Trump, is already threatening tariffs on Mexico and Canada of as much as 25%. I think it was 10% on China. And Governor, Europe's going to get it too, apparently. And you've got your hands on the levers of policy. Does that condition your outlook, that threat?
I think that primarily because because of uncertainty. I mean, we were already with very high uncertainty. The environment was certainly characterized by that factor, and I think the new elements that come from the policies from the Trump administration increases this uncertainty in different directions. So if any, I think central banks will have to operate in this environment. And we have already seen how the Fed have reacted. I mean, when you have this uncertainty, high uncertainty, which is undefined, blurred, it's not clear, but a negative scenario to be identified looking forward, the normal reaction is caution, gradualism, and I think this is what you should expect from central bankers.
What do you think the prudent approach should be as someone who has to manage that uncertainty? Is it to carry on removing restriction? Is that the focus for you now?
Well, we have still a policy in Europe which is somewhat restrictive, and we need to move gradually to a more neutral stance over the next semester or so. This is the central scenario, but at the same time, it's important to stress that we keep optionality, because this uncertainty matters. It matters, and we have to examine very carefully all the incoming information in order to confirm, if they confirm the central scenario, because at the same time there are risks in both directions. So it's two-sided, actually.
Maybe just picking up on that, another way to think about or a different way to think about American exceptionalism is to think about what does it take for a place like Europe, United States to achieve leadership in the world. And I think there's going to be three dimensions that are going to define leadership going forward: technology leadership, energy leadership, and capital market leadership. And I think the U.S. finds itself in a position where, as Katie and Lynn were saying, we've got all three right now. You know, with President Trump committed to sort of reinvesting in the American energy industry, you're going to see significant growth there. Tech leadership has been, I think, pretty firmly established, and capital market leadership, as again Lynn and Katie were talking about. And I think if Europe, as they think about deregulation and stimulating their economy, they've got to think about how do you create some tech champions. How do you get energy security in Europe, you know, especially given what's happened with Ukraine? And how do you get to capital market union so there could be an alternative capital market in Europe, you know, vis-a-vis the United States?
Well, let's talk about the capital markets issue, because this is a big one and has been for a long time. I think it was Jeff Bezos that said recently that the secret sauce to American success is having the best risk capital on the planet, the best capital markets anywhere in the world. And he was very specific about it. He said in America, you can have a 10% chance of succeeding, and you can raise $50 million like that. In Europe, forget it. Christian, how do we change that story for the Europeans?
Well, that is not easy to change. It will certainly not be within a couple of years, because it is deeply cultural. It has also to do with the question of failing. Are you allowed to fail? In the US, failing is good as long as you tried really hard to be entrepreneurial, whereas in various European cultures, failing means that you have failed, and that is something on your face for the foreseeable future very long. And so that has to change. It also has to do that Europeans tend to focus very much on the risk before they focus on the opportunity, versus the US is focusing on the opportunity versus the risk. So we will work on it, and I'm sure that Europe and the EU will try to do their very best to accelerate it, because it's obviously right when you look at the amount of startups and innovations coming from the US is outpacing Europe massively.
Then
it's the risk culture that we have in the U.S. Risk at times breeds innovation. And I can't think of a country that's been more focused on bringing innovation to market. You look at all of the great innovations that have happened over centuries. They've happened in the U.S. because you can get that access to capital, as Bill was saying.
Governor, don't you think we're skeptical of success as well in Europe? We don't just punish failure, we punish success. That's the big issue, I think, for a lot of people. Sitting in America, I've lived in New York for a long time.
No, I think it's clear cut. I mean, this is a major
But does that start with you and the team? Does that start with policymakers, officials? There is a phrase, allow me to complete this, because the Chinese will replicate America's innovation and the Europeans will always regulate. How do you change that culture?
Through incentives. I think that incentivizing risk-taking, I mean, if you ask me, it's primarily cultural, so it's not easy to deal with it with norms, with policy instruments, but still I think there is room here and there if we go systematically to see how the legal framework is defined and try to change a number of things in order to be able to reward risk-taking and create the incentives for people to take. I think that is one element in which more can be done, because in Europe there is excellent human capital, but we need to reward more those who are excellent. We have to reward talent. We have to reward more those who really innovate. And while this should be done internally in the firms, it's not yet a problem for the public sector, it's a more general problem. I think in the public sector, in a number of areas, we could really do a number of things in order to lead this cultural change.
Casey?
So I'm really interested in that comment around the culture and the need to embrace risk-taking. I agree with that very much. I would just also add one of the advantages that the U.S. has that's actually hard to replicate is the ecosystem between the universities, the venture funds, then these big tech companies that go public. It actually doesn't really exist anywhere else, and that's a very formidable advantage for the U.S. continuing to maintain the leading edge of technology. But actually, if I look, and I love the way that you framed that, Bill, and if you look across the primacy of technology, energy, and capital markets, I think it's also true that one of the greatest vulnerabilities for the U.S. is in the tech vertical, because of course we don't control access to chips, which is the foundational technology for all the things we're talking about. And even this announcement, which is exciting because we know we need the infrastructure to build AI, and we've announced $500 billion with Stargate. Sorry, these things are all happening this week, so I'm just making sure I get the right names and dollars. All right, so and then someone tweeted that there's only $10 billion spoken for. I'm sure we'll figure it out eventually. But actually, all of that's not solving the fact that we can't manufacture at the leading edge in the U.S. And I think that's a great vulnerability for us.
Well, and that's been an area of like energy protection and going back to Bill's 3 pillars. Energy security has been a big focus, and it is continuing to be a big focus of America. I agree with you that that is a potential vulnerability, but even the Inflation Reduction Act, the CHIPS Act, started down the path to try to get control of that in the U.S.
There is an additional privilege that we haven't talked much about, the privilege of behaving recklessly when it comes to fiscal management in the United States. There are things that America can do that the rest of the world cannot. And as they do those things, they seem to be putting additional pressure on the Europeans specifically. I can pick out the UK and more recently France as well. Countries that are losing fiscal space. They don't have the luxury of thinking about another extension of tax cuts that could amount to $5 trillion US dollars this year. Can I get your thoughts on that, Bill? The unique privilege of behaving recklessly with the U.S. debt. Will we retain that privilege in America?
Well, I think maybe coming at it a slightly different way, and it is the fundamental question, because despite all the tremendous optimism you're hearing about the U.S., I think the one worry that I have is the level of national debt and the level of deficit spending. And despite that, we do have the privilege of being the reserve currency of the world. At the same time, the capital markets at some point in time could start to have a problem with the level of debt, because you think about the level of interest expense to GDP, interest expense to the total government budget, needing to refinance $60 to $70 billion per week. Katie, I'm sure, knows about that in the Treasury market. These are very, very big numbers, and the numbers are deeply influenced by where the interest rates come out. So if rates don't start to bend down, if they stay flat or go up, these problems are even exacerbated. So it is a privilege, but it's also, I think, probably the biggest risk to this whole story is if you can't bend the yield curve, or at least start to bend rates down, it could have significant implications. And it's one of those things. It's not a problem until it's a problem for the markets. But at some point, the markets wake up and they have a problem with it. And then again, our ability to absorb significantly higher rates right now is not high, in my view.
Governor, how do you feel about those issues? It feels like America can stomach 4% interest rates, maybe 5% interest rates. If there's a moment of reckoning to be had in America at some point on the horizon, maybe we're close to having one already in certain European countries. How much fiscal space do they have left? Is the pressure on you to do the heavy lifting?
Well, the European framework is much more complex. It's more rule-based than in the US. Dealing with it has been always a challenge in the past because of the complexity and the governance of the monetary union. But seems to me that by comparison, the situation in the US is much more severe and concerning, no doubt. And I think that maybe the adjustment process may take longer, maybe different in Europe, but in the US, I mean, in a way or another, there will be adjustment if debt is perceived non-sustainable over the long term. And I think this is a problem now. I mean, my sense by looking at the market is there's too much complacency. And actually, during these days, it reminds me somewhat this sentence by Chuck Prince by mid-2007, while the music plays, we dance, 2007. And this sentence reflects two things: short-termism and benign neglect of risk and imbalances that might be building up. And fiscal is one, but there might be others. So I think this is a good reminder that in these high valuations here and there, across a lot of asset class. So I think we need to be, as central bankers, we need to be very cautious because we have seen in the past that the combination of these elements might end up very badly. And market corrections can be very severe. Fortunately enough, I think because of the previous crisis, I mean, the potential for systemic risks is far more contained, and that's good news. At the same time, losses could be substantial here and there.
Casey?
I think I agree with you, and I think there's a lot of people that are concerned about debt sustainability, so it is an exorbitant privilege to be the world's reserve currency. That is for sure true. We at TCW, we manage $200 billion globally. It's mostly in credit markets, private and public, so we do have a lot of treasury exposure, and I'm sure people are aware, but while we've been cutting rates at the front end, right, because that's what the Fed's trying to control, the term premiums brought up the back end of the curve, and people, that's telling us something, which is that there is a constituent in the market, I think, that is concerned about sustainability. And even if you just make it a very simple, like if the U.S. was if we're looking at the U.S. as a company, here's a company that's levering itself up with an uncertain growth outlook that's alienating its buyers, right? Like that I think that's some of what you're seeing in the long end of the curve. But you also said the right thing. You don't know what's going to be the catalyst that causes it to break. But I think it is something important to look at. And I just end by saying, you were starting to point to this, but this what I said before about the fact that everything's great, but it's all priced in, it's up and to the right. What we should be asking ourselves, I don't really have a good answer for this, I have a hypothesis, is why is the market at record valuations if there's so many things that we need to fix and deregulate? And maybe it's actually because we've borrowed that growth through debt and inflation of asset prices. And so that's something that I don't have an answer for, but that I think a lot about.
Bill, you got the answer?
Yeah, I think just to add to what Katie just said, I think the thing that we should reflect back on is the importance of Secretary Bessent's incoming Secretary of Treasury Bessent's policy. He's talked about the 3 threes, and I think they're really important. You know, get the deficit down to 3% quickly. That would inspire a lot of confidence in the market, especially the Treasury market, and probably the yield curve to some extent. Generate 3% growth, because the reality is we're not going to inflate our way out of this. We've got to grow our way out of it. And so maintaining 3% growth, I think, is critical. And the last, those are the 2 main points. And his last point is, 3 billion barrel equivalents of additional energy produced by the United States, which would be a stimulus to our economy. And if he does those things, I think he will create significant confidence in the markets. But I think that very quickly the attention is going to turn to him and say, can he really get us down to 3% deficits, again, relatively quickly?
Governor?
Yeah, my sense is the following. When markets are under this very optimistic mood, they tend to filter out new elements, at least for some time, in order to confirm this optimistic view. And they tend to neglect elements that might be at odds with this view. Let's take, for example, the expected policies of the Trump administration. Certainly some of them are growth enhancing, but not all of them are by any means growth enhancing, unless some key elements of economic theory are to be reconsidered. I mean, tariffs are not growth enhancing, certainly not for the global economy, not for in the long term from the US. I mean, weakening institutions, we know economic institutions, agencies, we know that the countries with higher economic institutions and institutional framework tend over the long run to perform better. Deregulation, broad deregulation of any kind. I mean, we have seen costs from deregulation in the past, very severe ones. So in a way or another, I think we will need to come back to all these policies to see how they are going to materialize, because there is a lot of uncertainty, and to reconsider the extent to which really are so growth enhancing as the market is counting now.
Christian?
I think we should also consider the foreign exchange currencies and what they do to that whole situation. I mean, one of the reasons why President Trump is considering to raise tariffs is because he feels that the trade deficit of the US is reflective of an unfair situation in the world. And with these high debt levels, which we are seeing on potentially higher debt levels, I cannot see an environment where we see a rebalancing of the dollar against the other major currencies in the world, because we will see a higher interest rate gap going forward, especially between the euro and the British pound and other currencies against the dollar. So I think this is all very much connected. We need to get the deficit under control. We need to see where the exchange rates are so that we can tackle the trade deficit, which the US still has.
The title of this is Divergence. That word is in there. I want to talk about that with you. Are there limits to that divergence? We've already seen a huge run-up in the US dollar. We've seen rate differentials gap out. The governor's thinking of cutting interest rates sometime soon. Chairman Powell does not have that luxury. He may have to reconsider cutting interest rates at all, and that was a point we made earlier on this panel. Are there limits to the divergence? Are we seeing any stress in foreign exchange, any stress in fixed income?
Well, that's almost a philosophical question, where there are limits to divergence. I think they are within a society, but they're also within trading partners.
Great conversation there with Bloomberg's Jonathan Ferro in Davos, and you continue to follow that panel by typing live go on your Bloomberg terminal. Look forward to some serious conversation there about the possibilities for 2025.
Yeah, a fascinating discussion. Now let's take a look ahead at what we're expecting, get you set up for your trading day on this Thursday. We're going to get U.S. jobless claims. Those come in at 8:30 a.m. Eastern time. The Treasury will also be selling $20 billion worth of 10-year tips later today. Plus, we'll be back in Davos. President Donald Trump is set to make a virtual remark at Davos at 11 a.m. Eastern. Of course, they're virtual because he's in D.C. after the inauguration.
I think it's going to be fascinating to see what questions he could ask by Schwartzman and a Botin. Is it going to be a fan base, or is there anything of any substance? But a great conversation there in Davos about why are we at record highs? Perhaps when we borrowed our way there for growth. Katie Koch, I thought that was an interesting comment from her.
The TCW CEO, Katie Koch, making a really interesting point. Again, this divergence, and you feel it in the comments coming from Davos, the extreme optimism and extreme pessimism of U.S. versus Europe.
And we're counting down, of course, we've got Bank of Japan tomorrow. We're going to have the ECB next week. But all eyes are going to be trained on Davos at 11 a.m. Eastern time for that conversation as Trump beams in to Davos. That's it from Danny and I. The surveillance team will take you through from Davos in just a moment. Context matters.
in 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The U.S. is going to continue to attract capital.
When you think about the U.S. economy, it's in a good place.
There is reason for optimism. There are green shoots that people are able to point to.
The ability to be successful, the rules, all that has really driven strong growth in the United States.
As America goes, so goes the world.
This is Bloomberg Surveillance, live from Davos, with Jonathan Farrow and Lisa Abramowitz.
Good morning, New York. Good afternoon, Switzerland. Good evening, Tokyo. This is the final and 4th day of the World Economic Forum meetings, and today is a day that huge gap we've been talking about between Washington, D.C. and Davos will close. President Trump has been looming over every conversation here today. He will speak directly to the group and take questions from Anna Botin of Santander, Brian Moynihan of Bank of America, Blackstone, Stephen Schwartzman, and Total Energies' Patrick Pouyanné. I'm alone right now, and it's not because John drank too much last night or decided to go skiing or decided just to look at the snow. He's hosting a panel and will be joining us later this hour. We also will be speaking to 2 of the great guests on his panel, Katie Koch of TCW, as well as Bill Ford of General Atlantic. In the meantime, you're stuck with me. U.S. and European stock markets hovering at near all-time highs, with the S&P posting the best start to a year so far since before the pandemic. You are seeing markets pull back just a touch, but this is really off the record close that we saw yesterday on the S&P 500. Focus on big tech. Can they continue to lead in the yield space? Still some knowledge, although a little tick higher. Right now, all eyes turn toward where AMH is in Washington, D.C., where President Trump has been taking questions. Emery, what have we learned from an interview last night with Fox News and President Trump, and what do we expect to learn today in his discussion with Davos attendees?
Well, I think what we're really seeing, what we learned last night from his sit-down with Sean Hannity, is that we have a change of heart from this president as he takes on this second term, especially when it comes to the likes of TikTok. Of course, remember, in his first administration, he signed an executive order demanding that ByteDance divest from TikTok. This was based off national security concerns. Now what we've seen from this president is he's signaling that basically anything that comes out of China that's an electronic device could potentially be a spying device. Take a listen.
We have our telephones made in China for the most part. We have so many things made in China, so why don't they mention that, you know?
Let me get to
the
some
interesting
issues.
thing with TikTok, though, is you're dealing with a lot of young people, so
they love it.
Is it that important for China to be spying on young people, on young kids watching crazy videos and things?
Lisa, in a world where literally everything is basically transmitting some sort of digital information, Trump is basically reviving this debate about what is considered national security. And this potentially may cause a bigger debate within his own administration, given the fact that you have the likes of National Security Advisor Mike Waltz, the new Secretary of State Marco Rubio. They have been very critical about TikTok, and they are definitely considered China hawks. And potentially, we will get questions regarding national security, China, especially trade with China today, when Donald Trump will be zooming in as the 47th president of the United States into Davos, and he's going to be taking a lot of questions. Now, I've learned that this Zoom is supposed to last 45 minutes. Based off what we've seen of just the first few days of his presidency, he'll likely take more questions and it'll last more than 45 minutes. But you could see who he's going to be speaking to there. Steve Schwartzman, not only, of course, of Blackstone, but someone who has supported the president. And maybe we'll get some energy questions from Patrick Pouyanné of Total.
Anne-Marie, thank you so much. And surely that is the discussion here, how to understand what national security is, how to correctly regulate technology at a time where people are talking about the potential influence of artificial intelligence. We turn now to someone who is brave enough to make the commute directly from the inauguration festivities in Washington, D.C. to the alpine vistas of Davos, Switzerland. Arkansas Governor Sarah Huckabee Sanders joining us now here in Davos. I am wondering, Governor Sanders, given the fact that a lot of people didn't decide to make that journey, are you acting like an ambassador, fielding a lot of questions? What are some of the questions people have for you?
Certainly don't need an ambassador. President Trump will address the group here today, although he can't be here in person, certainly dominating almost every conversation, but not just here, across the globe. I think there is so much excitement, so much optimism about him coming back into the White House. People across the world are excited to see what he's going to do, and he's hit the ground running and gotten a lot done in a short amount of time. This is somebody who now is coming in as a seasoned veteran. He has been there before, and there's no learning curve. He is getting a lot of things done and in short order, and the people are excited to see what's happening.
Anne-Marie was just talking about some of the discussions around TikTok last night on Fox News, and this question around what is national security? How do you adequately regulate big tech when you have also this focus on celebrating the national champions of U.S. tech companies? You're here to talk about tech. How do you reconcile that?
You know, one of the things that we're looking at, and certainly one of the places that we're leading in Arkansas and as governor, is you can protect national security. You can look at continuing to grow some of the technology and innovation. But one of the places I think that we have to do a better job is on our young people. We've seen a mental health crisis take place. And nobody is immune from it. And so one of the things that we can do is a better job protecting the young people from constant access and infiltration of nonstop device in their hand. They still need to get outside. They still need to pay attention in class. That's one of the things we've been doing in Arkansas, one of the things that we've talked about here, and I think one of the things that I hope to see the United States lead on.
And as a mother and someone who sees a lot of children, I think there are a lot of people who would agree with you. There is this large attention, though, and last night we really saw that in display when President Trump was talking about they're just a bunch of kids looking at some silly videos. Do we really need to care about that so much? Do you agree with that premise, or is this something that goes to national security, but also the heart of something else about what it means to have appropriate technology?
Certainly there can be a great resource in technology. It's a tool that a lot of us use to, I think one of the reasons that Donald Trump became president is because he was able to use technology to get his own message out and go around the mainstream media and talk directly to the people. And so I think it can be a great tool. However, it can't be something that our kids are spending 10 hours a day doing. And that's one of the things I think that we have to look at. One of the things we're talking about a lot, the pressure, the anxiety, the depression, the suicide rates that have skyrocketed in large part because a total access and connection to social media. And so protecting kids, I think, has to be one of the big topics of conversation.
Do you think that President Trump agrees?
You know, that's a conversation I haven't had with him, but it's something certainly that I look forward to talking about with him as he takes the reins here at the White House.
Do you think there is clarity about what national security is? and what isn't?
I think there are some big differences in kids versus national security, and whether or not they can focus in the classroom, and whether or not other countries are taking all of our data. Those are very different conversations. This is a president who I know cares a lot about protecting American interests and is always going to do what is necessary to protect our country. You've seen him taking action on day one, so I have no doubt, no concern over that. One of the things I do think that has to be a greater part of the discussion is the mental health impact that it's having on young people.
You're on two panels. One of them is talking about this. The other one is with Kentucky Governor Andy Beshear, who is a Democrat. And I believe you guys are staying in a similar place, and I'm imagining the Sharks and Jets walking past each other. It's a panel about the role of governors and states in presidential transition and implementing policy. And this comes at a time where President Trump has basically said, get on board or face the consequences. Do you think that that is the right way to get states on board?
I have a great partnership. I want Arkansas to be one of the leaders of a lot of the initiatives that the president is pushing. We're going to be one of the biggest champions, and I want us to be a place of innovation and use Arkansas as a pilot for some of the programs that we're rolling out. I think on healthcare, there is a lot of opportunity to do things in a better way than what we've done, and I think this is a president that's going to be able to do that. A good relationship with the states is a good thing. We shouldn't be in constant battle between the federal government and our state governments. And I think that's one of the things that you'll see both of us talk about, how we can have good cooperation and get things done that benefit the people that we govern.
Do you think it's a good precedent for funding to be withdrawn, though, from states that don't comply with certain orders from the president?
Look, I am in agreement with where the president is and the things that he's trying to do. And I think we're going to be able to not only improve things happening in Arkansas, but hopefully things happening in all 50 states. This is a president who's coming in with a huge mandate. People want to see his policies enacted. They know exactly what they signed up for because they've seen his leadership style, and he won in an overwhelming margin, and that's what people are hoping. He's going to come in and deliver on all the things that he's been talking about over the last couple of years.
Have you talked with Governor Beshear yet?
I haven't yet, but I'm looking forward to spending some time with him this afternoon.
But you guys both are the children of governors, I believe, and you both are coming to the stage, but from opposite sides, one Democrat, yourself a Republican. Do you expect it to be collegial? Do you expect it to be a working together kind of feeling, or do you feel like that divide is getting more entrenched?
Absolutely. I think that, governors have a unique perspective, and certainly I want to promote and bring business and economic development to my state. I know he wants to do the same, but there's some common threads and some common challenges that we're both dealing with. I think that we'll have a great conversation. I'm really looking forward to it.
One other reason why you're here is to meet with all these business leaders about potentially investing in Arkansas. Are there specific projects that you would like to see financed? Are there specific streams of business that you think would be helpful to get international investment?
Certainly one of the biggest areas of growth in our state is aerospace and defense. It's now the #1 export from Arkansas. Arkansas has the best economic growth of any state in the country over the last year. We're the #1 state for people to move into anywhere in the country. There's a lot of great things happening in our state. We like to tout that we are home to Fortune 1, a little retailer you may have heard of called Walmart. So we're not afraid of big business and success stories in Arkansas, and we have the opportunity to meet with a lot of companies and let them know that we're open and we're ready for them to invest and make Arkansas their home as well.
How many meetings are you having? How much did you get just an influx of people who wanted to meet with you? And did anyone surprise you, or any places surprise you where they came from?
It's certainly a busy couple days, and look forward to making them a really productive few days with a lot of good things to take back home to Arkansas.
Are you concerned, though, that there's this feeling that maybe the U.S. is putting itself first at the loss of other countries?
Not at all. I think it's important. Everybody is going to be competing for the people that they either govern or lead, and that's exactly what you're going to get in Donald Trump. It's somebody, he hasn't been shy about the fact that he wants America to win. There's nothing negative about wanting the best for your country and the people that you lead, and I think that people want to see him do that, and that's why he won re-election in such a big way.
Governor Sanders, really appreciate your time and you making the trek from Washington, D.C. to Davos. Not many people did that. Arkansas Governor Sarah Huckabee Sanders did. We look forward to hearing what you learn. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Danny Berger. Danny.
Hi, Lisa. Saudi Crown Prince Mohammed bin Salman told President Trump that he's willing to expand investments and trade with the U.S. by at least $600 billion in the coming 4 years. Saudi Arabia state media reported the prince told Trump by phone that the kingdom was eager to seize partnership and investment opportunities created by the new administration. President Trump's acting defense secretary is deploying 1,500 more troops to the southern border to comply with Trump's declaration of a national emergency. Robert Salesses said that he had also approved the use of military aircraft to assist with deportation flights of more than 5,000 illegal aliens detained by Customs and Border Protection. Fire crews are making progress containing a new fire that broke out in north of LA yesterday. The Hughes fire quickly spread to more than 10,000 acres, but is now more than 14% contained. About 50,000 people are under evacuation orders and warnings in the region. There is a chance of light rain across Southern California starting tomorrow. And that's your brief. Lisa.
Thank you so much, Danny, and let's hope for that rain, because that could make it a lot easier. Up next, tariffs and global trade.
If you're looking to take advantage of the United States through tariffs, which many countries do, you're in for a new rude awakening. We finally have certainty. If you don't disagree with the president, the one thing you will know is you don't have to guess where he's coming from.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg. Max Kettner calls it Goldilocks on steroids, which you could see in markets yesterday. You saw the S&P reach a record high in Europe. It's not far apart. Basically what you're seeing with yields just staying pretty constant. You saw a drop off in yields initially, but today just marginally higher. Meanwhile, not seeing that same kind of dollar strength that potentially could be disruptive, with the euro gaining just a bit, though the interesting focus is on the Bank of Japan, widely expected overnight in U.S. hours tomorrow morning for Japan to hike rates going against the ground, putting some sort of a threshold underneath the yen. Under surveillance this morning, tariffs and global trade.
We think that the next 4 years are going to be very clear. If you're a trader and you're looking as a country to do reciprocity with the United States, bottom line, you'll have a good environment. If you're looking to take advantage of the United States through tariffs, which many countries do, you're in for a new rude awakening in the United States. I hear people day in and day out talking about how wonderful things look going forward. We finally have certainty. If you don't disagree with the president, the one thing you will know is you don't have to guess where he's coming from.
There is is still quite a bit of uncertainty around exactly how tariffs will be implemented, but possibly more important for a lot of people here at Davos, what that will do to inflation. Will it be inflationary? Will it keep rates where they are, or will it potentially even increase the prospect of some sort of rate hike from the Federal Reserve? Joining us now is someone who focuses a lot on that macro environment as he invests in real estate around the world. He is Heinz Global CIO, David Steinbach. David, thank you so much for being with us. I want to start there. We've talked a lot about how rates can remain where they are simply because nothing is breaking. The U.S. economy is doing just fine, so maybe this is the neutral rate. Do you think that we can see a real estate recovery at a time where rates may not go down at all?
I do. I think it's important to remember that we're almost 40 months into rates going up in the U.S. and a lot of markets around the world, and that's a very long time, and the bid-ask spread has been quite wide for quite some time. And so even in this moment, if rates stay neutral or even tick up a little bit, I think the market has digested where we are right now. And really, at least when we're underwriting projects, are very much focused on how we can drive rent growth in our buildings, increase cash flow, and we're reducing the amount of leverage we're putting on assets as well.
Hold on a second. You said something that I need to dig into. You think that this market is actually stabilized and adjusted to it. A lot of people think that the real estate market's completely broken. You're not seeing transactions. People aren't able to borrow money to buy homes. Do you think we've already seen the bottoming out, the washout, particularly in commercial real estate that some people are talking about?
I think we have seen the bottom, yes, in the U.S. I think this year we're going to see capital that is on the sidelines begin to come in. I think certainly here in Davos, everything I'm hearing is every marginal dollar around the world is looking at the U.S. as a significant opportunity. And again, we've had 35 months of the market being able to have that price discovery, and we've been waiting a long time. And I think this year is the year that we'll see a lot of activity.
We've seen a lot of activity in specific slices of the market. Data centers, we've seen this in warehouse spaces. We haven't seen it in, say, office spaces, particularly in second and third tier cities. And I'm just wondering, do you think that maybe it's gotten a little lopsided, that that area that's been very popular stands to become less so, and maybe money flow into the office space?
I think there's still a big opportunity in data centers and industrial. Those have been big themes that have obviously carried the day for a long time now. And I think there's a lot of tailwinds that are really important to realize. I think for us, living is a top sector for us. The U.S. is about 2 million houses short, and we believe there needs to be a lot of new building that will happen. Retail is now a sector that we are very focused on. It has been challenged for so many years that the winners and losers have been sorted. And office for us actually is something that we are starting to look at. We're starting with credit in office today, but I could see as the year progresses us moving into equity.
So this is mostly in the U.S., you're saying?
Correct.
And I'm just curious, you talked about the multifamily homes or single-family homes even, and this idea of renting. And I wonder how much this is a structural change. We've seen, given the rise in rates and the increase in prices, there are a lot of people are locked out of home ownership, and we've seen an increase in renting, just structurally, and a decrease in home ownership. Do you think that that is a structural change that will continue to accelerate, even if, say, rates do go down, mortgages become more affordable?
I do believe there's some key demographic changes that are happening broadly in the West. It's happening in Europe, Australia, but also in the United States. And I think those demographic changes are also impacting what you're talking about. I do think openness to rental does give, there's certainly positives to it for a lot of people. And I think that the market needs to provide more rental housing that is attainable. And I think that's going to happen.
Do you think that there's actually more room to run in terms of raising rents? And I ask this because that's a main component of CPI, of the main inflation gauge that looks at consumer prices. And I'm wondering if that actually stands to increase.
More broadly, I'm concerned about longer-term inflation across many different sectors. So it's not only rental rates, it's other parts of the economy as well. I also think that there will be new corridors of demand that open up within cities. And so while rental rates obviously aren't going to be able just to infinitely go up in certain markets, but what we're seeing because of the demographic shifts, people are moving around and spreading out a little bit. And I think that's good for the market, and I think that will help provide more attainable housing as well.
One thing that's been a theme here at Davos is U.S. versus Europe versus rest of the world. And one thing that's kind of ironic is the more that people get excited about the U.S., the more they note that it's priced to perfection. And wait a second, maybe we should look elsewhere because they stand to do better, even if they just don't miss as much as people thought. Are you one of those who actually start seeing more opportunity in places like Europe?
We do invest money around the world, so we are an active real estate investor. We're in 30 countries, and we look at all the countries as where the opportunity is. Asia, for us, is our growth stock, and so we will stay active there. U.S., we will be putting a lot of capital to work in the U.S. I do believe that this is a great time. But Europe, what's interesting here in Davos, the negativity around Europe is it just cannot really be that bad. And I don't think so. And I think that, you know, we have raised a substantial amount of capital that we're ready to deploy in Europe, and we will do that this year. We are going to be very selective, but when I hear capital pull back from a geography, it feels that way here at Davos. I don't think it'll end up being quite as bad as the sentiment is.
Are there particular regions that you're looking at more closely? And I say this at a time where the economic engines of Europe are actually sort of the sick dogs, and the ones that were the sick dogs are kind of the economic engines. I mean, are you following that trend?
It is interesting to see how Europe has behaved this cycle versus the financial crisis. In the financial crisis, it was really Northern Europe that had much more strength compared to Southern Europe. This time it feels a little bit inverted in terms of Southern Europe for us. There's a lot of interesting activity right now in Spain and Italy and other places in those geographies. With that said, I do think that with the capital pullback, very interesting opportunities are going to open up in Germany. We're active in the UK as well. I think all those geographies will provide unique deal flow.
You mentioned the UK, and one theme that's come up again and again is just the debt and deficits of a lot of places. And I know as a homeowner that often the first place they go to is taxes on your home. And how much are you looking at some of these policies as a potential headwind to certain investments in certain places?
I think some of the headwinds you're mentioning are fairly ubiquitous in a lot of markets. You can add insurance to that. You can add, there's a lot of pressures on cost everywhere. And I think that is something that investors are broadly going to have to get their head around because it's impacting a lot of sectors. It's not just real estate, it's the broad economy. And further, I think the debt levels in many of the Western countries are going to put more pressure on interest rates in the long term. And so I think as we invest today, particularly in real estate, it's a longer term investment. You have to think about that horizon.
So what's your sort of base case or your stress tests in terms of the range of rates where you still are going to be above water?
We are using very conservative leverage now, and I think that's a little bit different than previous cycles where there was a bit more leverage in the system given the cost of capital. So we're being very conservative with leverage, and we're focusing very much on how much cash flow we can create when we actually make an investment. You know, predicting exactly where interest rates are going to be in 5 to 10 years is close to a fool's errand in terms of what's actually going to happen. But really preparing your capital stack for a range of outcomes and relying on income, relying on the actual real estate you're buying, that's what's most important.
So you mentioned Asia. Not going to let that go. Are you headlong into China, given the fact that real estate there seems to be on sale?
We have been in all those markets for a long time, including China, and we've had a lot of successful projects there. We right now are mostly focusing on India right now as the major growth component for Asia. China needs a bit more time, but India right now is where all the tenants that we have spoken to have really shifted into significant growth expansion mode, and that's where we're seeing most activity.
So are you staying in China? Do you think that there's still opportunities there?
Yeah, we're a long-term investor, and again, we've been in China for over 25 years, and I think you have to see the long term. But for us, again, right now, we're going to be mostly focused on India.
What's your main takeaway from Davos this year?
Well, it's interesting. I've been here several years, and I think the optimism here is palpable. And I think my only concern is when it's that positive, can it really be that good? So I'm actually feeling a little more just curious to ask some harder questions, but without question, I think 2025 is going to be a good year.
David Steinbach, thank you so much for being with us. David Steinbach of Heinz, which oversees more than $90 billion. Coming up, we have Ron Kruszewski, Stifel CEO, as we talk about bank mergers. You could see markets really embracing the optimism, although pulling back just a touch today. Ron will have a very interesting view on bank M&A in 2025.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Yet another hat tip to Max Kettner of HSBC with the headline of the morning, Goldilocks on steroids. And certainly that was what we saw in markets yesterday. Today, pulling back just a touch, but yesterday the S&P hitting an all-time high. It is somewhat narrow, with a lot of that dominated by big tech. Really not a lot of action in interest rates. And that's actually a wonderful thing for people who are worried about the potential for inflation, just a tick higher right now. 3 hours away from the cash open. Let's get to some morning movers with Menace Cranny. Menace.
Lisa, good morning. Well, it may be bullishness on steroids. Have a look at this. Larry Culp says it was a monumental first year for GE Aerospace in their first year of independence. $1.32, way above the estimates of $1.04. A buyback of $7 billion for this year, and a dividend, raising the dividend by 30%. So this is about a company working through its supply chain issues. Those are undeniable. But to coin the CEO's phrase, a monumental first year of independence. Now, when you want to understand the personification, what do the risk of tariffs in Canada really mean? Think Alcoa, think about aluminium, and this is what they're saying. Tariff pain in the aluminium world would be it would have a quietening effect. 25% tariffs on Canadian aluminium would cost consumers $1.5 to $2 billion. It would be a real hit to demand. That is if it comes through. They did beat on their numbers, $1.05, way ahead of the S Street at 97 cents, and a revenue of $3.48 billion. But it is this worry, this overhang of what could come from tariffs. I leave you in the entertainment space. This is the games maker. You just think about Apex Sims, UFC. Those are the kind of games that they have. The net bookings, they guided lower, $7 to $7.15 billion for the year. And what you're seeing is some peak engagement in some of the games. Dragon Age engaged 1.5 million players in the third quarter. That is down nearly 50%. Global football, down mid-single digits. So this is about trying to understand where you are in the peak of some of these games and some of the software that's out there. Lisa.
Thank you so much, Menace. Right now, we are looking at markets that are trying to digest everything political. We were talking about Max Kettner of HSBC with his Goldilocks on steroids, basically saying it's not political. It's just simply that things look pretty good. And if you're looking for politics as a catalyst for something, if anything, it just keeps positioning in check. Well, one area where the president's policies definitely are gaining some optimism is the bank mergers and acquisitions space and just the M&A space in general. Joining us now is someone who got the interest rate call right last year. He is Stifel Chief Executive Officer Ron Kruszewski. Ron, thank you so much for being with us. So just how bullish is it?
You know, it's pretty bullish. I mean, when you look at everything, I'm surprised walking up here. I haven't seen more people doing dances walking out of here. I mean, it's pretty bullish. And you know what? I'll tell you the one thing that could be the canary in the coal mine. You brought it up here. We need to watch the 10-year, okay? A lot of people are talking, the bill's going to get through Congress, this is going to happen. The one thing that is going to be sort of the governor is the bond vigilantes, okay? So if policy gets out of whack here a little bit, you'll see it in the 10-year, and then that could could, that could give a little difficulty in equity market valuations. But other than that, I'm telling you, things are pretty positive.
Okay, so this is sort of the fly in the ointment. We've heard this from a couple people. I just wonder what you make of the rally that we've seen in the 10-year over the past week or two, where people basically are saying, you got Scott Bessent, who's going to rein things in, make things rational, and they'll get something through. Do you think that that's too soon, too optimistic?
Well, I hate arguing with the bond market. I think that the rally probably does have a little bit of optimism in it. I think really the deregulatory bent really can be disinflationary in terms of just taking some costs out of the system. So there's a lot of optimism about that. And so I think the 10-year right now is giving all the right signals.
All right. Meanwhile, you are seeing that deregulatory impulse. One thing that I find interesting is the transactions that you yourself have done have not all been focused in the United States and actually just closed on a European middle market investment bank. Why Europe? Do you think that there's actually more opportunity here at a time where everybody is sort of decrying its demise?
We're here in Europe. I must tell you, my board looked at me and said, why Europe? I mean, they said, that, and I'll tell you why Europe. It's been pretty depressing over here, and I think it's a good time to invest, I'll tell you. And you know what? The European, I'm listening to the banks here and I'm listening to people here in Davos, and they're echoing the fact that they want deregulation too. They want a better business environment. So I think there's going to be some overflow of U.S. policy into Europe, which is going to bode well for European business activity in general, specifically M&A. So, we're always investing, and why not?
Okay, hold on a second. What? You've had a lot of conversations with a lot of potential people in regulatory bodies as well as government in Europe. Do you actually think they're going to do this?
Well, I think there'll be pressure to do it. Whether or not they'll do it is the risk in the deal. I think it'll take longer, but even if they don't, they're going to lose market share to U.S. companies. Let's just call it what it is. So if you want to say we're not going to do it, I'm going to say, well, that's even more bullish for the United States international companies.
Would you be interested in doing more deals in Europe?
I'm always interested in doing deals, but in Europe, again, my board will fall over if I keep. There is so much to do in the United States, and we haven't talked about where there's going to be a big boom, and that is in M&A. I mean, M&A in the United States is poised to have a phenomenal year. Last year we talked, and I told you 2024 would be a transition year, and it was. Deal volumes were actually down last year.
You can take a victory lap. Go ahead.
I'm going to take a victory lap.
Okay, go ahead.
But you know what it is? Today, look at the banks, for example. At KBW, we are the leading bank advisor. We have #1 market share. So we have a viewpoint into what's going on. There are 8 changes in the regulatory bodies right now. And in one industry where personnel is policy, it's banks. So the environment coming up for bank M&A, which has really been, if anything, strangled by, frankly, the prior administration, who did not like mergers, didn't like bank mergers, that's changing.
Can you give us some sense of what scope of M&A we could potentially see? We've got some 4,000, more than that, community and small and mid-sized businesses in the United States. In a year, 2 years, 4 years, how many do you think there'll be left?
That's always a great question. Okay, I can confidently say there'll be less than. I know, I'm not going to give you a number, but you know what? What the financial services industry needs to do is it needs below the big SIFIs. Okay, so who has grown? The biggest banks have grown, and I actually think that's sort of bad policy. We need our champion banks. We need our JPs and bank. Don't get me wrong, but we need the regional, the 50 to 100 to 120 billion dollar banks to be able to combine. They need to have innovation and scale to compete, and it's good for the U.S. economy. So I am optimistic that banks will combine for those reasons, and it's going to be powerful.
Are you concerned about some of the commercial real estate portfolios and the balance sheets of some of these banks in the meantime? And I say this because, we have some people saying that you've seen the washout, other people saying you really haven't, because it's not a market. There haven't even been transactions in a lot of these pockets of commercial real estate. Do you think that's going to be a bit of an issue?
A year ago, I would have said yes. Today, I think that there's a lot of things that are going back against that trend. #1 being people are coming back to work. The whole idea was you don't need real estate because no one's going to come back to work. Well, most companies are now coming back to work. President Trump says, federal government people are coming back to work too. So is it still a pocket of concern? Yes, but I think less so today than it was a year ago.
Is Stiefel all back to work in the office?
You know what? We have been. I mean, we can't compete. We can't compete remotely. I mean, I'm all for work-life balance, and we have situations where we'll do that. But we are a collaborative, innovative firm, and we need to be together. So, yep, we are.
Okay, Stiefel has been a huge acquirer of other companies in a merger in its own right. You talked about Europe, but what about the U.S.? Are there certain pockets of opportunity that you're looking at more closely?
Well, the wealth space has been probably our strongest growth, you know, and to give you a sense, I like to take an opportunity to just talk about our growth. You know, I joined in '97, so I've been around a while, and we had $100 million in revenue. We'll do almost $5 billion this year, mostly driven by wealth, just helping people plan, and that's what we're really good at Stiefel, and I see continued opportunity to grow in that space.
So this is an area for a lot of people. This is highly competitive, and I keep hearing about it, whether it's Citi that's creating their wealth unit, whether it's Morgan Stanley, UBS, all of them trying to really lean into the wealth space. Why is it so important now as a ballast to a lot of banks that traditionally have been lenders?
Because it is a stable, fee-based business. It doesn't have a lot of risk, and so when you and it's the same customer base, and so the banks have realized that. They've been leaning into this for a while, so that's not a new phenomenon. I think culturally we have an advantage, so even against the biggest banks, and so I like that business.
So President Trump is going to be addressing the Davos crowd today, 5 p.m. local time. Yep. We've got 11 a.m. Eastern time. What are you curious to hear from him?
I just think I'm curious to hear some optimism. I really am. I felt that some of the things that have happened in terms of, I don't agree with all these pardons, but since they're all out of the way, maybe we're not going to be worrying about the judicial side of a lot of things. Let's focus on economic policy, and I hope he has a positive message for the people here in Davos, which I'm confident he will.
Yeah, was there anything particularly interesting that stuck out to you about what you heard here?
I think here, well, you know, I'm just reporting here. I don't want to make any political statements, but I will tell you there were every meeting last year was DEI and climate, and it's really not top of mind here this year. Now, is that good or bad? We can all have our viewpoints, but I will tell you it's noticeable to me the amount of discussion here that is economic based.
And encouraging?
It is for me.
Ron Kruszewski, thank you so much for being with us today. Stiefel Chief Executive Officer Ron Kruszewski here in Davos. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Danny Berger. Danny.
Hi, Lisa. Secretary of State Marco Rubio is planning his first trip since his confirmation. Rubio will reportedly travel to Panama as early as next week, underscoring President Trump's seriousness about taking back the Panama Canal. Sources say that Rubio also plans to visit Guatemala, El Salvador, and Costa Rica. Elon Musk is already expressing skepticism about the Stargate project announced by President Trump earlier this week. Musk questioned if the companies, which include SoftBank, OpenAI, and Oracle, actually have the funds for the AI investment effort. OpenAI CEO Sam Altman said Musk was wrong and suggested that he was upset because the pact could rival his own AI efforts. Parts of the southern United States have seen their worst snowstorm in 130 years. As much as 10 inches of snow fell in New Orleans, smashing a record of 2.7 inches set in 1963. Similar accumulations were recorded in parts of Florida. Houston, Texas was hit by more than 4 inches. Airports are struggling to keep up with the weather, leading to the cancellation of more than 1,800 flights. And that's your Bloomberg Brief. Lisa.
Thank you so much, Danny. Up next, taking risk.
I think it's a good but not amazing time to be taking risks in the market. When you take into account what's already happened to risk premiums, how much is baked in, you've got to say, well, it can't be great.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
That was a great party last night. That's all I can say, Brahma.
Oh, yeah. Here you come. Who are you?
What
is
if
this
you
person?
told him? Where have I been?
Yeah, well, you've been partying, you've been skiing.
Okay.
You've been ice skating.
All
You've
right.
been examining the snow, taking measurements of all of the snowflakes.
Nice.
Yeah.
Okay. Is that what I do in my spare time? Okay, I appreciate that. Have you done any market checks?
Yeah.
Should we do one?
Really?
Okay. We're down a 1/10 of 1% on the S&P. Under surveillance this morning, apparently, taking risk.
I think it's a good but not amazing time to be taking risks in the market. When you take into account what's already happened to risk premiums, how much is baked in, you've got to say, well, it can't be great. You could have a pretty great year for the U.S. economy. You could have U.S. companies keep being really productive, keep returning money to shareholders, and it not be an amazing time to be an investor because it was already baked into the price.
Just had a great conversation about this downstairs in the World Economic Forum. Bramo, I know you followed a little bit of it. It was interesting when we got into US exceptionalism, and Katie Koch at TCW, who we'll catch up with a little bit later on this morning in the next 30 minutes or so, making the case that, yeah, sure, things are pretty good and they might get better, but how much of that is already fully priced? Just that little bit of caution that I haven't heard too much of in Davos over the past few days. Heard a lot of it in the last 60 minutes.
And you're seeing this in people looking to other places that maybe are just lower priced, not even necessarily where there's more optimism, which is why you saw the DAX, why you saw some of the European stocks in regions, in parts of Europe that actually aren't doing that well, soared to near record highs yesterday because of this exact dynamic.
Second best on that panel joins us now, after Katie, of course, the General Atlantic CEO, Phil Ford.
Still joined us?
Well, good to see you.
I'm happy to be second.
That's a happy second, Katie, of course, of course. Bill, let's build on what we've already talked about already this morning. A lot of the audience followed some of those comments on Bloomberg Television. That note of caution, yeah, sure, things are great, but markets are pretty fully valued.
I think it's true. I mean, values are in the top 80, 90th percentile, or if you look at a 10, 20-year history. So a lot of the excitement about the U.S. is priced in, and I think as we talked about this morning, I mean, there are three big drivers which gives you a lot of optimism about the United States. You know, energy security, tech innovation, and capital market leadership. Those are all true, and I think they all create a real sense of opportunity. But again, it probably priced in. I think we had a good conversation about some of the risks related to the trade deficit, the budget deficit that need to be addressed.
Let's talk about some of the opportunities as well. A lot of people want to get into your world. Private markets, it comes up all the time. What does that mean for the kind of strategic risk that you take as a firm?
Well, as a firm, we're focused on innovation, entrepreneurship around the world. And I have to say, there's no shortage of terrific entrepreneurs, no shortage of good ideas. So our pipeline is pretty rich right now. And again, I think, that we're at an incredible moment of inflection in the technology space. And turns out this is the fifth major tech cycle of my career. I think back to the PC cycle of the 80s, the internet cycle of the 90s, the mobile cycle of the 2000s, and then cloud in 2010, and now we have AI. It's the fifth big cycle, and this one is probably the biggest in many ways, and it's going to have the most profound impact. But what that often does, it sort of rewrites winners and losers, creates opportunity, and we're at the early stages of that. So I think this will play out like all those cycles over 10, 20 years, not over 1 or 2 years.
There was a huge pipeline of private tech deals that were supposed to IPO, and then the pandemic hit. And they haven't IPO'd. And a lot of people are saying the reason why they haven't IPO'd is because they don't like the prices they're going to get. Do you think that that's been washed out of the system, or do you think that there's still some reckoning there?
I think we're going to have an IPO renaissance right now. I think we've had 3 of the toughest years on record for IPO activity. And I think it was a combination of things. I think it was an over-regulatory environment in the U.S. and from the SEC. That was one thing holding people back. Second was maybe a post-COVID lapse. 3, there was a lot of capital in the private markets that was available for companies that they were taking advantage of. But I think we're at a moment in time where it's time for the IPO market to open back up. And there are 3 ways to win. Basically, the companies can raise capital, and it's been a while since they raised capital in 2020, 21 at the market peak. Second, it gives the public a chance to invest in some of the most exciting growth stories that they've been really shut out of for a while. And, of course, for our private market investors, it gives them a chance for liquidity.
It seems like there's a real tension right now in Washington, D.C., because Donald Trump has been talking about national champions in the big tech space. Yeah. At the same time, that there are real questions around what national security is, et cetera. Do you have a clear sense of the difference?
Well, I think he's right to point out that if you look at like the top 5 or 10 tech companies in the world, most of them are out of the U.S. and they're homegrown, and they've been successful, and they've emerged as global leaders. And I think he's right to champion those companies. I mean, he's of course worried about power and scale and all the usual things. But I think generally speaking, he's looking to stimulate investment in the United States and really foster more innovation, more growth.
He's playing a big role in the company that you're on the board of. And we talked about this a little bit already in Davos, Switzerland. We'd love your opinion right here on Bloomberg Surveillance. What has the last few months been like, being on the board of ByteDance?
Well, I mean, since we had legislation passed in the United States that really would effectively ban TikTok if we didn't come up with a solution, and it was really around national security, we've been highly focused on trying to develop that solution. And we were very grateful to President Trump for intervening and keeping TikTok available. And the company really wants to engage with him and develop a solution. And I think we're quite optimistic we'll find a solution.
Do you think that solution is going to involve selling the U.S. assets to a U.S.-based company or individual?
I think there's a number of alternatives that we can talk to President Trump and his team about that are short of selling the company, that actually would allow the company to continue to operate, maybe with a change of control of some kind, but short of having to sell.
Do you think that the Chinese government would allow that?
I think so. I think that I'm optimistic about the dialogue that's emerging between President Trump and President Xi, and that might help create a much more constructive environment, a much higher level of engagement that could lead to a positive solution.
How unique is this moment with regards to being on the board of a company and needing the input of both the Chinese leader and the American president? How unique is that? And do you see that model being replicated at all with the likes of, say, Meta, who cannot get into China right now?
Well, I think what we're seeing is what ByteDance really is in TikTok is it's a global internet company with Chinese heritage, and I think we're going to see more examples of global companies coming out of China, and they're going to have to confront some of these geopolitical issues and navigating the U.S. government and the Chinese government. And I think it's going to be something that we're going to see more of. And again, my hope is that with better engagement between the Trump administration and the Chinese leadership, we'll actually find more common ground going forward.
One thing we've witnessed over the past few days, and Lisa and me have been talking about this, the perceived disconnect between the headlines we're having out of Washington, D.C. on trade, and then seeing equity markets in Europe at all-time highs. You've struck a note of optimism regarding trade this week. In fact, I would say optimism around the incoming administration, the new Trump administration, almost across the board. You've mentioned that already this week. Can you build on that? Where does that come from?
Well, I think, first of all, I'm very excited about Treasury Secretary Besson and his agenda. I mean, he has his 3 threes, which is 3% economic growth, get the deficit down to 3% as quickly as possible, and increase energy production by 3 million barrels. I mean, I think those are very, very positive for the U.S. economy and for the outlook. So I think that's a good thing. And I think, the Trump policy agenda, I think is going to be one that's pro-business, pro-growth.
What's fascinating to me is not necessarily the reaction to President Trump from the United States, but from Europe. And that actually people are so down on Europe. And when you talk to different executives, they're actually getting more optimistic that there actually will be change in Europe, that maybe now is a time to be invested. Are you one of those people?
I am, Lisa, and I have to say, in my conversations with CEOs in Europe, they want a catalyst for change. They want regulatory rollback. They want a more constructive business environment. They want to be global champions. There's some terrific companies in Europe. Many have been held back by excessive regulation. It's held back investment. It's held back innovation. And they want that to change. So I think they're welcoming a catalyst coming out of the U.S. that may push for change.
Are there specific areas within Europe that you actually think are ripe for investment? And I say this at a time when people are talking about where is that tech dominance coming in the continent?
Well, I mean, we've been investing in Europe for over 25 years, and it's always been about 20 to 25% of our portfolio. So despite sometimes the doom and gloom, there's a lot of terrific entrepreneurial companies in Europe, in the internet sector and even the software sector. So I don't want to lose sight of that. And there's some, Europe is full of human capital. There's a lot of talent here, and there's plenty of good entrepreneurs. Again, I think they're held back by the regulatory environment. I think they're held back by not having a single consolidated capital market where companies can go public like we have in the U.S. I think those are detriments. But at the ground level, they're entrepreneurs, they're high-quality companies, and there's innovators here, too.
Are you confident we'll see that cultural shift? The governor of Spain talked about that earlier this morning. Are we going to see that cultural shift where Europe starts to embrace failure and doesn't punish success?
I hope so. I mean, again, I am seeing more young people across the continent being willing to start companies, and there is venture capital and growth equity capital. Like I mentioned, we've been active here, available for companies. I wish they had a bit more of a risk-taking culture. I wish that we had a better IPO and exit environment. We don't have a consolidated capital market in Europe the way we do in the U.S. I think that's a detriment. That's why many of the companies choose to go public in the U.S., even from Europe. But maybe that will change.
Bill, got to do this more often. Not just once a year. Bill Ford, the General Atlantic CEO. Bill, appreciate your time, sir. Hey, thank you. Thank you very much, sir. Coming up very shortly, in the next hour of Bloomberg Surveillance, we'll be catching up with the Saudi Finance Minister. Jumaane Bousachi is going to sit down with the Finman in just a moment. And then after that, the TCW CEO, Katie Koch, ready to go. Looking forward to talking about private markets with her. The Boston Celtics co-owner, Steve Pagliuca, also co-owner of Atalanta Football Club, which is having a wonderful season.
I think I remember you mentioning that once.
We'll be talking Italian football a little bit later, other things too. And look out for this conversation with Joe Taylor, important conversation about the relationship between the United States and Canada, the Ontario Teachers Pension Plan CEO. From Davos, Switzerland this morning, good morning to you all. This is Bloomberg Surveillance.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes, I don't know why, but for some reason, I love thinking about black swans, and at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
You clearly have an administration that wants to use fiscal policy.
When you have a messaging from the top in the United States around pro-business, that causes investment.
I'm optimistic on a lot of policies that are coming together.
We think that the next 4 years are going to be very clear.
There is questions around the geopolitical landscape is probably the biggest one. Tariffs in particular.
This is Bloomberg Surveillance, live from Davos, with Jonathan Farrow and Lisa Abramowitz.
Live from Davos, Switzerland, at the World Economic Forum on the final day for us here at Bloomberg Surveillance. Good morning to you all. Once again, that word on repeat, optimism. People optimistic about the future. And there's been a real shift. And it's taken, what, 3-4 days? All of a sudden, people are talking about a different Donald Trump presidency, one where we'll solve some of these issues. Bramo, the trade story. Yes, Europe's going to get it, apparently, maybe. And at the same time, equities are at all-time highs. And I think we've heard that on repeat, Lisa, over the past few days.
Yeah, and there's a real tension here. How much does it have to do with Donald Trump, and how much does it have to do with the underlying momentum in the economy that will be turbocharged simply with the reduction in regulations, which is basically gaining steam throughout all conversations? I talked about Max Kettner, Goldilocks on steroids, this headline that I think you might have written.
I saw the note.
With us in mind. But he was looking at how it's not because of politics. It's because basically you're looking at a strong economy. And if anything, the political uncertainty will keep sentiment in check.
Number one risk, though, it's come up time and time again. The number one risk, a fiscal deficit on steroids. And how close are we, Lisa, to that moment of reckoning? I think it was Katie Kocher we'll catch up with a little bit later from TCW, who's looking, Lisa, for the potential, not a base case, but a worry that you do get that failed auction and this story changes and changes quickly.
The bond vigilantes certainly are the black cloud hanging over some of the enthusiasm that we're hearing, because if yields do surge, that could potentially stymie some of the opportunities that everyone is saying, whether it's M&A, whether it's deals, whether it's investment, that are on the table.
Lisa, doom and gloom with a smile. It's what you can expect through the next couple of hours here on Bloomberg Surveillance.
And weeks.
Yeah, and years. It's going to be a long career. Doom and gloom with a smile. Katie Koch joining us in about 10 minutes' time. Don't miss that conversation. For now, though, a really important conversation. Bloomberg's Jumana Basecci leading our coverage out of Dubai with us here in Davos, Switzerland, and sitting down with a special guest. Hey, Jumana.
Hi, guys. Yeah, good morning to you. Sitting with me right now is His Excellency Mohammed Al-Jadaan, the Saudi Finance Minister. Really good to be talking to you. My colleagues in the U.S. were just talking about the excitement many people, many industry leaders feel about the prospects for the U.S. economy this year. But my question to you is, how does the rest of the world feel about it? What do you think the return of Trump means and his talk of tariffs for global growth?
Thank you very much for having me. And I think a very strong U.S. economy is a good thing for the world and the world economy. The same applies to other major economies. If they go south, the whole world would really feel it. So we are excited.
If the world gets cold.
Exactly. I mean, we are excited about the U.S. New administration, and we are excited about the U.S. economy. We think the next few years will actually show strength in the U.S. economy, and if that will be good for the whole world. Obviously, we need to be watchful. We need to make sure that we also support cooperation and multilateral institutions. But I am confident that the U.S. economy would be positive, and I think the IMF in their latest report showed that the U.S. is on the upside.
It seems like His Royal Highness the Crown Prince had a constructive call with President Trump yesterday. A lot of reports this morning saying that Saudi plans to invest up to $600 billion in the U.S. over the next 4 years. For people not familiar with those figures, that's about 55% of Saudi GDP. You're the finance minister. Where are you going to get that money from?
Saudi press agency actually issued a statement on this. We enjoy a very strong relationship with the U.S. over the years. I mean, we have a relationship that spans over 8 decades, very strategic, based on economy and trade, and will continue. I mean, currently we have over $770 billion of investments in the U.S. So this is not really new. This is a combination of investments and procurement. We have very ambitious plans in Saudi Arabia. The Saudi Vision 2030 is moving on plan, and our relationship, whether it is with the US, with Europe, with China, will continue to be flourishing as part of that reform that we are doing.
Yeah. I guess I just think about it from a funding perspective, because there are mega projects that Saudi Arabia has committed to, and we've talked about the reprioritization of goals and the redirection of funds over the last year, but then there are new projects that Saudi is taking on as well. The World Cup, for example, Qatar spent $200 billion on that. So the question, I think, from the investment community is, if you are planning on borrowing more, how much balance sheet deterioration are you willing to tolerate?
We have, in Saudi Arabia, we have very strong, actually, fiscal buffers, very strong. And we are very, very careful about what we spend, how we spend it, and the return on that spend. We have a very clear plan. We moved from just 3 years fiscal plan into actually a long-term fiscal plan. We've concluded this last year. So we know exactly what we are going to spend, where are we going to get that money from, how we are going to make sure that it helps the economy and not crowd out the private sector. That is a long-term plan, and all of these projects will fall in place within that context. We recalibrated what we need to do. We wanted to make sure that we prioritize what would make matters. We wanted to make sure that we don't overheat the economy, so we extended some of these projects over an extended period of time. And we wanted to make sure that our private sector benefits. So if we do too much at a short period of time, the private sector will not catch up. So we will have a lot of leakage from our economy by importing a lot of things. So we wanted really to balance it, and that's what we did in the long-term plan. I think if you want to see how this actually is reflecting in Saudi, you will need to see what is happening with the people in Saudi Arabia. They are embracing this change. I mean, if you visit and you could see it, they are really part of that change. You could see it in the PMI and the Purchasing Managers Index, which is very high.
I'll get to the growth question in a second, but I do just want to ask on the funding. Can we expect further sales of the government stake in Aramco?
There is no extra funding than what we have planned for the long-term plan. And